Alrighty. Well, I'm running a little bit late, but hey, order flow pulse is out on the site. Also, I'm trying to eat some waffles that the wife made. She made Belgian waffles. So the market's selling off a little bit early morning. Not much is going on. Initial jobless claims was a dud. Nothing to be traded. I got some big news to release though about the futures market in general. Some of you might already know. You're gonna need there's 214 lots that just kicked off right there. 154 of it was one single order, so we're definitely selling off. We got about 13 minutes to the open. I got some resting orders at 960 down there. Yeah, trying to eat and then start the stream at the same time is very difficult. So we had 154 lot kick off. That's pretty significant. So the big players are definitely in the market pre-market. If you play the opening drive, I'd be careful. You got to be quick on the draw with that. I'll explain all of this once I'm done eating. But the wife made some Belgian waffles, so I'm just trying to get them down real quick and then go at it. Yeah, so go to cmegroup.com and you'll see the big news right there. You'll see the big news right there at cmegroup.com. cmegroup.com. Single stocks are coming to the futures market in the summer. All right. Yeah, the the big order dots on the Alpha Dom make for wonderful scalps. Yeah, they do. Uh, I used to dom trade with jigsaw trading, and I had to stay hyper focused and stare at the resting orders and orders coming in. So when I developed the dom, I just like wanted to know what would have been good back in that day for me to have. Um, so yeah, and I'm gonna be working on the execution buttons for the dom. Also, I would like to work on some hotkey stuff. I've got my own personal hotkey add-on that I wrote for Ninja Trader. I'm gonna have to rewrite some of that logic because it has some quirks to it. Um, so I'm gonna have to rewrite it. Not rewrite the whole thing, but refactor it. That way you can scalp off the DOM with with hotkeys. All right, we got 8 minutes. Okay. All righty, market. What you got today, market? What you got today? Okay. All right. Okay. Let's get this done. All right. Sorry about that. The wife made some Belgian waffles, and I had to choke them down real quick. Uh, I don't even think I tasted them. They're actually pretty good. All right, what we got here? This is a 5 minute chart. Let's take a look at the daily. The daily, I've got some levels right here. This bottom level, I don't think we're going to hit anytime soon. That 500 is not going to be hit anytime soon. But around 24,500, and realistically, we could hit that. We could hit that in the morning, first hour. We have no idea what this NQ will do. NQ trades like a squirrel hyped up on Red Bulls, so sometimes it's a little squirrely, sometimes it's just taking a nap. And we've got some resistance up in this area too, 25,500. 25,500 is a pretty substantial level. And if we can break that and hold that, we might go up here and then test this level up here. I don't think we can do it all today. That's definitely not in the cards, to be quite honest. I mean, we could possibly, but that'll be kind of hard to do. But you got to think about where we've been at for the past weeks. We just been, I mean, for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Past couple weeks, we've just been kind of ranging back and forth. And it's a pretty big range. We've been ranging back and forth. Um, so this is what the market does. The market tries to search for the value. It searched for it way up here. And then we're just kind of just in a balanced market, to be quite honest. That's why you got to have two different trading plans. You got to have a trading plan for a raging market, and you got to have a trading plan for when the market is in balance. But if you're a hyper scalper like me, you just want to look at the daily and get an overall feel for it. Right here, yesterday, I thought for sure we were going to sell off, and we didn't. Um, so I had to flip my thesis of going long. So I went long. I had a loser, a winner, a winner. So it wasn't a very very large profitable day, but it was there. Yesterday we had a nice P shape. This is actually bullish. We had a nice P shape here during these few days. Kind of a point of control. It's just been kind of like in the range itself, and then the other day, I think this was what was this, Thursday, Wednesday, we just really had that. That's kind of abnormal, but we had a nice little huge range right there. So we were closing below it. That's why I was thinking we were going to kind of go down because, well, that's what I was just thinking. Um, but right now, this is a 5 minute chart. What I have up here, the green and the blue violet lines, that's what's called the Heikin-Ashi smooth line. You have to excuse me, I'm drinking coffee as well. So, what that is, the Heikin-Ashi smooth line, I did some research on some high frequency trading and what these institutions are doing. So, I read some of the white papers. And some of these institutions, they were talking about smooth Heikin-Ashi. And I was like, what? So, what it is, if you take the Heikin-Ashi chart, and what you do is you smooth it out. Yeah. So you take the Heikin-Ashi chart and you kind of smooth it out with, like, I'm using 9 EMA period, but you can change that. The indicator you can download on the site, but I have it on the 1 minute here as well. And how I use it is if we are sloping upwards and we're separated, okay, the current price and then the close price is the blue violet. That is a Heikin-Ashi open, high, low, close divided by 4. And Heikin-Ashi in Japanese stands for average chart. I mean, not average bar. So that's all it is. And then I'm smoothing the open and close out with a 9 EMA because that's what the institutions, they said that they were doing with some of their HFTs. They were making sure that they were in the right direction. Then they hyper scalp it, or HFT. That's what they were doing. So I kind of like it. Sometimes I have it on there, sometimes I don't. I normally just trade off the DOM, but I'm trying to get used to like heat map trading like this as well. So this is released. It's on the site. You just have to create a membership. It's called the Order Flow Pulse. Now there's quite a few modes to it. We got 2 minutes to the open. We got a few modes to it. We've got the live pulse. We have 5 second, 15 second, 30 second, 1 minute. So I'm going to keep it on the live pulse and kind of see what it's like. I don't trade off of like book map or heat maps or anything. I'm kind of trying to get used to it. But what you have to do is you have to put in the ticker here. Like I have NQ March 26 and the minimum volume of 2. I just set that to 2. I don't set it to 1. There's no need for that. And the large volume is 30. That's for like when bubbles will show up with a with the text inside. It's kind of really useful for like the 1 minute and the 30 second, and it's kind of useful for the minute, the 30, 15, and 5 second. The resting orders is 5. This is the resting orders up here. The blue is the bids and the red's the asks. Resting orders you can change in real time. You can do 2, which is not very useful. You can do 10, like I normally do. It depends on how the market's trading. You have to change that around. But this is Order Flow Pulse. If you use Bookmap, I'm not trying to compete with Bookmap, but I just wanted to try to build this out because there's some people that would use it. You do need level 2 for the heat map. So now these bubbles are created as 9:30 on the open. Now these bubbles are created within 100 millisecond. So any trades that happen, let's say there's 50 trades that happen within 100 millisecond, that's going to create a bubble. Okay. That's going to create a bubble, and you can actually tick merge it. Let's say you tick merge it to 2, but then that's just going to tick merge it to like quarter, half, 3/4, like quarter, half, and then 3/4 and full. It's just going to tick merge it to 2. So normally what I like to do is just let the market settle down the first 5 minutes. We have 44 lot that they just kicked off this single order of 44 lot. That was probably this bubble right here. Now with this bubble right here, what I don't think the book map does, which at least that's what AI told me. And you know they lie like a politician, but the AI told me that book map didn't have this. You see how dark that 200 order is? That 200 right there? Right there, see how dark green that is? That means it's high positive delta. When you see like a low opacity bubble like that, that means it's not as high of delta. I mean, that's what AI told me the book map didn't have, and they lie like a politician, so take it with a grain of salt. Um, Probably what I need to do is actually I need to download Bookmap, kind of use it and see what it's like. I've never used it. I mean, if you're going to try and go long off of the open and drive right here, if you're going to try to go long off of that, you got to be quick, people. You got to be really quick, and you got to move in there and then move to a break even. That's why I have a 20-point stop right here. We have on the ATM strategy. This is just the basic entry. If you just go to basic entry, that's what that is. Uh, I'm trying to set my site up, the stream up that is conducive for me to be able to trade and to stream at the same time. Now, this is the first time I've streamed the order flow pulse, but I wanted to see what it was like because I changed some code around very little bit last night to try to get tweak. I need to tweak out a little bit more performance. I mean, the performance on this is okay. I mean, you can move the chart around pretty easily. Um, I will tell you, if you try and take resting orders and take it down to 2, you're going to lag the system because all of this background stuff has to be painted. Okay, all these bubbles are painted, and I think I'm leaving it for like 2 hours, and then it kind of drops off. Um, Let me take my 5 minute chart and drag it down here. I need to keep the 5 minute chart active of what I'm trying to do. And we got opening. We're definitely opening up. If you took that off of the stacked and balance right there on the 1 minute, that's a valid trade right there. You've got this right here, the Heikin-Ashi smooth lines. The Heikin-Ashi smooth lines are sloping upwards. They are separating. That is good. So we had a sell imbalance that got up there, got caught, and we had a buy imbalance. I didn't take this trade, but if you took it, it's a valid trade. Where's your stop? Could be down here. I mean, if you took this trade, I mean, you're already in like maybe 25 points up there, about $500. You can just scalp that off. Uh, I just sit on my hands for the first 5 minutes, to be quite honest. I just sit on my hands, makes quick scalps. Yeah, the order flow pulse, you're going to need level 2. Now, what I do, because I'm trading with Bullnox, I've got like 5 funded accounts with Bullnox. What you're going to have to do is get level 2. Um, and only get it for like with what you trade. Don't be getting everything that's not needed. Um, I don't know if we're going to get a pullback or not. All right. I just got a quick scalp off of that real quick. Here, let me reset this. I was messing around last night. I just got to reset the. Here we go. So people, that was account 21. I just got a quick scalp off of that real quick. Account 21. It was just a quick 325 scalp off of that. So that accounts like 50,400. Hopefully that can be passed next week. The reason I scalped is just because I saw this large bubble right here. We're definitely sloping upwards. And we got a stacked and balanced. So I just got a quick scalp off of that real quick. Um, it wasn't actually $300 on that one trade. It was only like I think two and a quarter. It was only $225 for that one scalp, real quick, because I was trading overnight a little bit, testing something out. But early morning, if you took this trade right here, we got some large trades coming in here. We got 129. We got 129. So your stop, your support level is there at 070. At 070 is we got some nice support right there, but you want to trade with what is conducive to your account size, is what you want to trade with, people. I made a quick scalp on that. What other account I got? Well, I can switch this over to account 26. That's 26. I need to get a trade day in on account 52, one of my funded accounts. If you got this on the opening drive, good job. Um, be a little careful. We're a little toppy. Just be a little careful. Right up here, we had 129 lot. We had persistent buying up there. You saw that. You see that little dot right there? That little dot right there is telling me persistent buying, and that was an indecision spending top candle. So we could be getting a little toppy. Also, another thing that I like to use with this Heikin-Aschke smooth line that I coded, and we're definitely bullish. If you are trying to short this market with this Heikin-Aschke, Heikin-Aschke, I don't know how to do that. Japanese would be furious with me. I'd get beat for that. The Heikin-Aschke, uh, if it's sloping upwards the way it is, and it's separating like this, and you're trying to short the market, I don't know, man. Good luck with that. But that's just me. I trade with the trend. I'm a trend trader. I trade with the trend. I let the big dogs eat, and I just pick up some crumbs. That's what you got to do. Here, let me shut my office door. Uh, okay. We're definitely above the VWAP. Yeah, we're definitely above the VWAP. Yeah, streaming is kind of difficult. Trying to figure out all your things that you want to do. Uh, Plus, I'm on a MacBook Pro and I'm trading using Parallel, so I give it all the resources it needs. Uh, we're definitely bullish, people. If you don't already know, it doesn't take a genius to say that we are definitely bullish for the morning. You don't have to be a genius. All right, this is what I don't like, people. This is what I don't like. Up here in the live pulse, the live pulse is right here. The live pulse, we've had some contracts kick off. We had a 30 lot kickoff, and they just got absorbed up there. We have persistent buying right there with the spending top. We had persistent buying get absorbed a little bit. So as I was saying earlier, what I was trying to say is, when you see these lines separating, please don't try to short the market. And if you do, well, hopefully you're correct on a higher time frame. But I don't try and take any shorts when we are above the Heikin-Aschke lines, the smooth Heikin-Aschkes. And also, when we rally like this and we go way up here, we are separating from these Heikin-Aschke lines quite big, because that green line is the current price for a Heikin-Aschke chart, and the blue violet is the close for the Heikin-Aschke chart, and it's kind of smoothed out with the 9 EMA. And when we separate it, separate from these lines like this, more than likely you're going to get a pullback. Well, I wouldn't say more than likely. You're going to get a pullback. It might not happen right away, but yeah. But it just that's the way it is. It just kind of pulls back. It like if you put in a 9 EMA chart, 9 EMA moving average, you'll notice a lot of scalpers use the 9 EMA. A lot of scalpers. Mike Bellaforte at CME Group that runs the CME. I'm sorry, not CME Group. Jeez. SMB Capital. Mike Bellaforte that runs SMB Capital. His traders use the 9 EMA, and also they use the VWAP, volume weighted average price. They use the VWAP. Be careful about trying to short, because right now you've got support right here at 070. At 070 you have support because you got that big candle right there. So you got to be careful for if you're trying to short. If you can get a short, that's great. If we close below this, and we've got, okay, so we have a sell imbalance, but it just got taken away. They just got absorbed. We had 4 times more sellers than buyers, but they just got absorbed because it was happening in real time, and then we traded back up through it. Um, if you look at a 5-minute chart, here, let me drag over my 5-minute chart real quick. 5-minute chart here, you'll see that a sell imbalance right there on the 5-minute chart just got absorbed. That's a sell imbalance. So 5 times more buyers than sellers on so they just got absorbed. I wouldn't even try and short this market, to be quite honest. Um, oh, let me get those execution things back. Boom. Okay. The first basic entry is a funded account, and the second basic entry is a eval. I just took I took trade in evals, and I'm like up 325. Yeah, I'm up like 325. So I need to trade my personal account too. I got a personal account with Ninja Trader. I need to trade that. So we ran up, we had a little sell off. If you took the open drive right here, if you took the open drive, you got a nice little scalp right there. I didn't get this whole move, because I just don't trust the market when the first 5 minutes, I just don't trust it. I really try to sit and wait. And then this right here actually happened like within 4 minutes. I got a quick little scalp right there, people. That's all I got was a quick little scalp. Um, It's hard for me to stream and trade at the same time because I'm trying to explain things, and I'm so used to be quite honest, I'm used to just sitting in my office with my headphones on, noise cancellation. I shut my door so I don't hear the kid and the wife going at it sometimes. Sometimes they're arguing, sometimes they just playing. I just put my headphones on and listen to some music and just trade market all by my lonesome. That's what I'm used to. And I just crank it out. Uh, but this streaming stuff's a little different. For some reason, I can't walk and chew gum at the same time. And with the NQ, man, you got to be on top of your toes. They don't call it the Widowmaker for nothing. We just had a large order get filled right here, 138 lot. That if you saw the bubble, that was like 250 volume. Now, if you download this order flow pulse, you'll notice that you can't grab this area right here and then resize it. I will get there. I'll work on that. Also, the timeline, you can't really scroll and like you can. This is not a ninja. This is a basic Ninja Trader window. It's not a chart. It's not a Ninja Trader chart window. I built this whole window in C# because that's what Ninja Trader uses. uh, for their system. So, and I built it with WPF, the Windows Presentation Foundation, WPF, uh, for performance reasons. If we if you try and short this is valid because it's sloping down. So if you try to short this, you got to sell and balance. If when you break this low and try to short it, your first target would be 030 because that's where the large buyers are right here. That's where the large buyers are. So if you try to short that, your first target will be 25.030. So if you're trying to short this, you need to be moving to a break even. You need to be moving to a break even because we can easily just slam right back up. Take a little bit of profits, pay yourself. If you got a micros, sling around a handful of micros, pay yourself, move to a break even. You can always get back in. Let's say you get stopped out, you can always get back in. There ain't no problem with that. I do that 2 or 3 times. So you gotta be careful with this thing because we got CVD of 951 positive CVD. You got to be careful. Um, so if you took this, you probably got like 10 points. I mean, sell half, move to a break even. Don't let a winner turn into a loser. Break even is not a problem, people. Not a problem. I wish I could trade off of these bubbles. They seem kind of cool to trade off of. I mean, I understand the resting orders and everything, but the bubbles, man, these bubbles move too fast. I'm used to a dom, which is kind of idiotic for me to say because a dom moves fast. But that's just what I've done for 10 years of trading this squirrely thing. So you got a light bubble right there. You see what I'm talking about? This thing is, I mean, we didn't even get to the target. But here's the thing: if you come up here and you try and short a raging market, look at the 5 minute. Look at your 5 minute. We got an we've slammed up and we got a pullback, and you're trying to short this and try to get 50, 100 points. Good luck with that. Also, here's another thing. If you download the Smooth Heikin-Ashi, we have a buy and bounce up here that looks like it's trying to get absorbed. But, man, these buyers are strong. Look at a 5 minute. This is a 5 minute, and you need to look at this. I use a 5 minute for context. So we had a nice, huge first 5 minutes was right here, and then the second one was huge. We had a rally. But look at the Smooth Heikin-Ashi lines. We pulled back. We kissed the green, that lime green, the current Smooth Heikin-Ashi line. We tried to sell off. We kissed it, and then we're moving right back up. So why would you try to be short in a raging market? And if you're trying to short like that, I really would take that trade, but I was kind of talking and I couldn't figure out what I was doing. You could have taken that trade, but what you need to understand is once you get 10 points, 10 points, you need to move to a break even real quick. That's why I'm using these basic entries now so I can get in and go to BE for break even, but I set a 20-point stop for an ATM. So if I would have taken this, my target would have been 030, and then as soon as I get 10 points, I just move to a break even, protect my capital. That's just how I trade. I protect my capital. Because I've been trading before these fake prop firms came out. And I traded on the minis. The micros weren't even a thing when I was trading futures. The micros weren't even a thing. You had to learn capital preservation real quick or you blew an account. And trust me, I blew a few of them. When you blow about 8, 10 grand, you start learning how to trade. When you start blowing about 8 to 10 grand, you're like, well, maybe I need to look into this and see how this thing actually works. All right, we got some persistent buyers up there that just got absorbed right there. We had that 30 lot that got absorbed and we moved down. We went back to that same area. We had 2 persistent buyers that got absorbed. Persistent buying. The persistent buying is it needs to tick up 3 times. If you look at my settings for persistent buying, it's centered, the dot centered. You can center it left, right. Persistent ticks is 3 and minimum volume is 10. What that means is that it has to tick up. Like it has to to 120 to like 120 quarter, half. It needs to tick up 3 times with a minimum volume of 10 per tick. It cannot tick up, and then tick down. That's invalid. It has to tick up 3 times. And you could probably see it in the bubbles here. Um, okay, so this right here, we got some big indecision going on, people. We got a stacked buy imbalance right here that got absorbed. We have a stacked sell imbalance that got absorbed. What this is telling me is to stay out, wait. Wait. Just sit and wait. Look at the 5 minute. This 5 minutes doing the same thing. If you look at the 5 minute, we're definitely bullish. Okay. That 138, 172 got caught, so you could have possibly tried to get your scalp and get a short squeeze out of them. Okay. Um, but once you see right here, you can probably try and get a short squeeze out of them. Once we start trading above here, uh, that's like a 40-point stop. So that's like an $800 stop. So, but you know, you made about 50 max. So that's about $1,000 trade if you actually got 50 points. Um, this, this, yes, you got a little short squeeze out of them. Not my personal ideal trade because you got that buy and bounce that got absorbed, but you had that persistent buyer right there. That was helping push it up, and you probably could have read the bubbles, maybe. I'm not sure. So we got some buying up in there, but you see how hollow those candles are on the live pulse? That means it's low positive delta. It's just low positive delta. Delta is not very high. It's low positive delta. Oh, let me go back to my execution screens. Now, also, if you have problems with this chart, um, when you fill out these, when you put in the ticker, like NQ March 26 contracts, and you do minimum volume of like 2 and you do large volume of 30, I think that only shows up on the minute, 30, 15, and 5 seconds. Right now we're on live pulse. So the resting orders is 10 in order for this to show up. Right now at 150, we got some decent resting orders up there, and we got these resting orders down here, which is not very much. And then you've got a bend, tick bend. Now, tick bending, like if it's set to 4, then it would be like 134, 135, 136. It just tick bends it because the NQ trades really fast because it's a thinly traded market, trades really fast. We had a persistent seller get absorbed right here. That is definitely bullish, but the problem is we're definitely in an uptrend, so you can probably trade off of these Heikin-Ashi lines, but you have to look at the CVD for the past, I think that's 15 minutes is negative 92. I need to update this so where it updates in real time. We got some resting orders at 150. They got filled. Resting orders at 150. We got persistent buyer. We got resting order at 150. They got filled. And now we're just trickling back down. So you had persistent buyers stacked and balanced got absorbed. Persistent buyer looks like it's getting absorbed, pulling back here. But it's kind of hard to short because you're above the smooth Heikin-Ashi lines. That's still bullish to me. What we have to do is we have to be closing below it, kind of like this. We have to be closing below it, and it has to be separating. And you really have to look over to the left and see where your support level is, and also where all those other bubbles are. The support level is right here, and try to get yourself a stacked imbalance or persistent selling, and then try to catch it. Don't be trying to catch a whole move. Okay, base hits, people. Base hits. You just saw me took a base hit this morning on an account, and I'm up in that account $325 for the day. It's a base hit. Base hits. I mean, come on. You take a 10-point base hit on a mini. That's $200. Do that 3 to 5 times. Let's say you get 5 good ones. That right there is $1,000 a day. You're done. You're good. Don't be listening to these gurus saying, I make $50,000 in a month. I make $100,000 in a month. Well, how much did they have to spend, and how many accounts did they hit the prop farm to blow that up? They probably spent about $10,000. Now, granted, I understand. I would easily spend $10,000 to make a net profit of $40,000 for the month. Yes, that's fine. I understand that, but I've been trading for 10 years, and to me, that's not trading. That's just being a degenerate gambler. And yes, you are profitable, but not everybody can do it. All right, we got a nice little breakout. We had a little pullback here. We had an inside bar on the 1 minute. It's still sloping upwards. You see what I'm talking about? This thing is sloping upwards. The Heiken Ashi is sloping upwards. Don't be trying to short a raging market. Do not be trying to short a raging market. We got a lot of persistent buyers up there. They are cranking this thing out. They are cranking this market out today, people. They are cranking this bad boy out. Yeah, so I really wouldn't be trying to go short, to be quite honest. You've got way too many. I mean, look at this: 44, 168, 185, 129. Those ain't retail traders, people. That's institutions. You got a 138, 172. Who knows? That could have been them guys taking profits. We have no idea. I wish, I had access to the trade IDs. I'm not privileged. I'm not in the big boy club. If you're not in the big boy club, you don't get that info. You don't get that info if you ain't in the big boy club. Maybe I could try to get a job at BlackRock or Citadel or Goldman. Maybe I can kind of get that information for you, but who knows? Uh, all right, we got some resting orders up there at 200, 200. You got some resting orders, as you can see right there. The bubbles are lighting up green. The delta is dark green. It's lighting up like a Christmas tree. Build them 25, 200. We got a little low up. Come on. Big positive delta right there. We got some orders that got filled on there. We got 200 orders filled. We got 200 orders filled right there on the 1 minute. That's 200 right there. We had more orders filled. And the thing is about this 200, that's one order right there as a large institution that just got filled 200 orders. Okay, that's not a retail trader. That is I'm reading that right from Rhythmic Data Feed. That is just one order. That's not multiple orders. That's just one order. I don't have order slicing in the logic yet, but that will be added. That is one order. And plus we got the bubbles lighting up like the Christmas tree. That 200 needs to hold. If that 200 don't hold, we could possibly go back down here to 163 down to this area right here. But don't be trying to short a raging market, people. Like the Chinese general Sun Tzu said, pick your battles that you know you can win. Don't be trying to don't be one of these people that say, "Well, the market's up 400 points. Uh, I think it's overvalued. I'm going to short it." And then, yeah, don't be doing that. That's my trading plan. I think it's too high, so I'm going to go ahead and short it. Blown up. Oh well, it's just an eval. I just do another one. Nope, don't trade like that. You got resting orders up there at 220. At 220, you got some resting orders. Down here, I'm not really seeing much. My resting orders are set to 10. Let's set this to 5 and see what we got going on. That's a little too much. Let's set this to 8. That's a little bit better. That's a little bit better. Set that to 8. That's a little bit better. If you download the order flow pulse, you're going to need level 2 data for this heat map. Don't be buying all the level 2 data that you have. I'm doing this with Bulldocs and I'm paying what $14 a month, but I only get the few futures. That's fine. ESNQ, that's fine. That's all I want. I don't get gold and all that other stuff. I'm a one trick pony on the NQ. Every now and then I'll go to the ES, but I'm a one trick pony on the NQ. Pick the future that you like and stick with it, learn it, figure out how it breeds. There's some persistent sellers right up in that area. They got caught. Persistent sellers, they got absorbed. Boom. You probably could have read that on the bubbles here, but I'm not used to reading that stuff on the bubbles. I'm used to reading a DOM. This bubble thing's kind of new to me. I'm an old fart that trades off the DOM. This bubble thing kind of new to me. It looks kind of pretty. All right. Now these bubbles are being formed within 100 milliseconds. So let's say you have 50 orders that come in within 100 millisecond, the bubble's formed. Okay, bubble is formed. The darker the bubble, the more delta. So if it's dark green, that means high positive delta. Right there, 55. That's a high positive delta right there. Of course, I guess how people use this bubble thing. I can code it. I just can't trade it. Coding it is no problem. I got the data. I got the data kind of like on this chart right here. I got all the data to be showing you the Heikin smooth lines. I got all the data to show you the imbalances, the large order trades, the bubble profile. I got all that data, and what I'm doing is just coding presentation for you. That's all I'm writing code for, just to show you the different ways of viewing simple data. The data is very simple. You have an open, high, low, close, and you have a volume. Okay, and also you have the bid. You have bid and resting orders. Okay, that's fine. I get the depth of the market. When an order comes in, I read it. When it's executed, I read it, and I'm storing that in there, and I'm storing that, and I'm just calculating the data and giving you the presentation. We got some resting orders down there at 150, so I guess we got some support. Uh, this bubble trading thing, I guess you come down here for support and it kind of bounces off. I'm not sure. I'm used to a Dom reading that, to be quite honest. Uh, is it or will it be possible to run 2 copies of order flow pulse so I can track both ES and NQ simultaneously. Yeah, I noticed that, the way I coded it, yeah, I just think it's just a flag that I have in there, if the window is already open, it's true, and then somehow you can't like, right now, when I have a DOM and I'm looking at a DOM, I can't create another DOM. And, yeah, to be quite honest, I do trade, both of them, NQ and ES, I kinda look at it. I'll look at that this weekend. Because I did notice that I'm like, yeah, people are going to want to see 2 of them, which is valid. And I just need to read through the code, and I got a good idea of where it's at. It's where you actually the on click button. It's just I'm setting a flag for if the window's open and things, just for the window to open. I just have to change a few lines. I might even be able to fix it tonight and just get an update out there. So let me do that. I'll probably fix it this afternoon 'cause I don't trade. I might be streaming till 12. Uh, I'll look at it this afternoon because I only trade from like 8:30 to 11:30. If I make money, I make money. If I don't, I don't. I come back tomorrow. But yeah, I'll look at that because I need to get that done. Not for the bubbles, but for me, and I'll do it for the bubbles first, and then I'll do the same thing because it's the same logic I'm using to open the windows basically. Because I need 2 DOMs up there. Uh, so it's probably an easy fix to be quite honest. I've just been so busy. I just didn't do it. I know I needed to do it. I just haven't done it. Okay. Uh, if you this is a sell and bounce right here. We got another sell and bounce. These lines are sloping down. Yes, that's a valid that is a valid short right there. That's a valid short. Your first target is 121. So that's about 30 points right there. To be quite honest, folks, if you are in this trade, you need to be making sure a winner does not turn into a loser. Don't be the person that gets into a trade, you got some profits, and it comes back up here and it explodes and you're crying and you're crying. Yeah, don't be doing that. Right now, if you're in this trade right here, if you're in this trade right here, because we have a sell imbalance and we kind of popped up. If you're in this trade right now, you're in it and you've got about 20 points, you need to be selling half and locking some in. About on a mini, that's about a $400 trade. You take about 5 micros, you got about 200 bucks, pay yourself half, move to a break even, book some profits because you don't know this thing could bounce off of this area right here. This area right here is that bubble right there, that 30. That ain't very big, but that 129 is a pretty big support area right there. That's what you got to think about, folks. That's what you got to think about. You got to understand that what you're trading. What the heck kind of thing is that? What hotkey did I hit? Oh, um, I don't know what that weird looking thing was. There's so many indicators out here that people use. Um, you got to understand this is support right here. You got 129. You got institutions at 44, 168, 185, 129. You've got a crap ton of capital right here, people, and they are going to protect the living crap out of that. You got to understand that these shorts right here, 138, 172, that could have been these people taking profits. I don't know. I don't know without the trade IDs, and I'm not privileged to that. But the shorts got caught. Okay, the shorts got caught, and we moved up. But you have to understand what you're dealing with. What you're dealing with. Let me explain this. This will put it into perspective. You're trying to short a raging market. Let me put this into perspective for you. You've got 44 plus 168 plus 85. These are just one each. I say you got 500 contracts. Okay, you got 500 contracts. That could be BlackRock, Citadel, Goldman, who knows? But you got 500 contracts right here. Okay, that's 500 contracts. What the, where is it? Boom. So you got 500 contracts right there. Okay. So if you took that short, you need to be paying yourself, to be quite honest. You got 500 contracts right there. If it moves 1 point, just 1 point, right there's $10,000 just for 1 point. So if you move 20 points, that's basically $250,000 on 20-point move. You got 500 contracts right here. These are large institutions. These ain't your retail traders. These are one orders that got filled. Uh, these are large institutions. If and they're going to protect their profits. Their profits are up here. They're going to protect it. That 200 lots underwater. So that 200 lot is underwater. They got caught. Okay. You've got to understand they're going to protect these profits. Yeah, I mean, order flow policy, yeah, it does have great potential. I just need to find time to code it. Like this 55 lot right here, that's real dark, solid red. That means that was high negative delta. Okay. Yeah, it does have great potential. The main thing I am concerned about is just performance. I'm trying to tweak out every little performance I can. There's more stuff I want to add to it, but I got to be careful. Right now, I'm able to move the window around. Um, I got to be careful um, because if people start looking at like three resting orders and start looking at it like that, their chart's going to lag. And then they're going to ask me, why is this thing lagging? Blah, blah, blah. Well, because you're trying to see every single stinking resting order there is. Just kind of find the sweet spot that's good for you and good for the system. Now, um, I don't know what Bookmap does. I don't know what language it's written in. It's probably written. It's either written in C sharp, C++, more than likely. I don't think it's written in Rust. Uh, that's probably what it's written in is C sharp or C++. C++ would be faster, I think. Um, and C sharp, you got to understand there's garbage collection. This is code is C sharp. And you have to understand that when there's too much memory being used up, because I have to store all the data, all the bubbles being painted, which are being cached, and I'm pre-painting a lot of the bubbles and reusing it and caching it. That boosted up the performance, and I boosted up the performance with the threading stuff with thread locking, and I'm having to drop stuff out of memory myself to manually drop it off, but also C sharp has a garbage collection. Basically, what that is when an object is not being used anymore, C sharp the brain behind it will just say, "Hey, this data is not needed anymore, so I'm just going to go ahead and remove it for you. I'm going to delete it, blow it out." Uh, and when you try to do too much, that system that collects all that stuff and tries to blow it out gets overwhelmed. And when that gets overwhelmed, that's when the system starts lagging. And right now, I'm trying to tweak out every little stinking performance I can. Um, hmm, I'm sorry, that 1 minute is not up there. There we go. See that 129 we kind of sold off right here. So if you got in on that, you have to understand you're in a raging market. This is raging up. We're definitely in an uptrend, folks. So if you try to counter trend trade for one, you better know what you're doing and you better be quick on the draw. But right here, look at that. We came right down to here on that support of that 30 lot. What the heck did I just do? There we go. So that 120 lot, guarantee you, they're going to protect them profits, people. They're going to protect them profits. So why try and short that? I mean, I do. I do counter trend trading, but I don't try to get 50, 100 points. I just get like 10 points, sell half, move to a break even. I don't sit there and try to get 50 points on a counter trend trade. Can you? Yeah. Does it happen? Yeah. Do I get them? Yeah. But don't expect it. That's what you have to understand is that these institutions, these are large orders being slung around. That's 500 contracts being slung around. They're going to protect that capital. Now we could have these institutions. 174 lot kicked in. So right there, 190. That's high negative delta, folks. I mean, we have some support down there. That's 190 volume, and 174 of it was one order. And what you have to understand with these institutions is they play a different game than we do. And these market makers, these institutions play the I know some of these so-called gurus, they try to say, "Oh, the institutions are looking for liquidity. They're looking for liquidity." We are 5% of the futures market. Retail traders, 5% of it. These institutions don't give a flying crap about us, to be quite honest. Okay? They don't care where we put our stops. They're not stop hunting us. They're not trying to build liquidity off of us. We're 5% of the futures market. They play off of each other, and they have a different ball game than we do. And the market makers, like let's say Citadel is selling let's say 1,000 contracts, okay, and then Goldman wants to buy some, okay. Well, the market makers, they will match them up, and then they will go ahead and execute those orders, and then it gets to the CME group, and then and then it shows up on the books and everything. So these people play a different game than we do. Now, once they get executed, they need to be shown to the market because it's regulated. It needs to be shown to the market. But they play a different ball game than we do. I mean, look at this on the DOM. These right here are resting orders. Let me tick merge this to 4. Okay, so it's 25, 26, 27. Okay, now I'm tick merging this. We had 148 lot, yeah, 140 lot kick off at 135 earlier. That was a sell. But look over here. You got 14, 11, 17, 16, 20, 21, 13. You had 174 contracts. Okay. All of that has to be filled. They're not going to be filling all of that and then running the market way up. They're filling this, but they are also in a different ball game, and they're matching up and they're playing off of each other. And then it actually gets shown in the market. Um, This is the live pulse. Let's switch over to the minute. Okay. Actually, let's switch over to the minute. Um, so we're switching over to the minute. This is a 1 minute and it's tick merged to 2. Okay. This is a different chart that I've developed. What you saw earlier was the live pulse mode. This is a different chart. I kind of like trading off of this one more, and I'll explain what's going on here. Resting orders. Let's go to 10. Um, The resting orders, you can see the resting orders. Each column right here, there's one column, two, 1, 2, 3, 4. Each column is 1 minute. Now you can switch this to 13 seconds, 15, and 5. Each column is 1 minute, and I tick marched it. The bin. It's called tick binning, and I've set this to 2. So it just takes like quarter and a half and kind of merges all that data together for one. You don't want to do that for the ES because there's really not needed. It's a thickly traded market. It's not needed. But these candles right here, you have your resting orders up here, which is great. You have your resting orders up here, and then down here you have your bids, your resting orders for the bids down here. Now, this candle right here, this candle that's currently being formed is thin volume compared to the previous 1 minute. Okay, because you're looking at the 1 minute right here, but you're looking at a candlestick and you're not seeing the real picture. Now, on the live pulse mode, the bubbles widen and they get big, okay, when there's more volume. I tried to do that on the 1 minute and they were overlapping each other and it was just very difficult to read. So one night I just sat down and I said, how can I do this? How can I figure this out? And something told me was keep it simple but effective. Yeah, we're selling off. Um, you got to understand your supports down here. That's where the 185 was. Support selling off. They could be taking profits. They could have ran this thing up, taking their profits, and now they're running it down. That's a valid trade right there. That's a valid trade right there. We broke the low. We've got a sell and balance right there. But you got to understand that once you get positive, you got to lock in your profits because you've got these large players right here. We don't know who they are, but you got some large players right here slinging around some serious size, 500 contracts in this area. You got to, when you get profitable, lock it in, lock it in. That's a valid trade. That's a sell and balance of, I have it set to 4 and 3. So it's 4 times more sellers than buyers. It closed below that imbalance area, which is good. If it closed above, like this one did here, that's absorption. Those sellers got absorbed by buyers. We are sloping downwards. We are sloping downwards. This is a valid trade. Now, if you took that sell and balance right there, if you took that and you're down here for about 15 points, you need to be locking it in. You need to be, let's say you normally would trade 1 mini. Okay, that right there is like $300. Okay, but what if you trade 10 micros? Okay, and then you sell half and you pay yourself 150 and then you move the other half to a break even, then you manage the trade and you try to get yourself a runner. And let's say it comes down here to 030. Let's say it comes down here to 030, which it looks like it's getting ready to do. 030 is down here. We got some resting orders right up in here. Let's say, okay, let's say it comes down to 040 around this area. We don't have any resting orders. Let's keep pushing down. The bars right here are getting wider because that's more selling volume. And then the darkness, if you see inside there, if the bar is real dark red, that means it's high negative delta. Okay. Right now we're good to go. I'm thinking if we break above 044 right up in this area, you need to be cutting the trade. But right now you're good. You got it's thin volume up in here. Thin volume. You got to trail your stop. We got some buyers right down there. The bars are not very wide. So think of it as with the live pulse, big bubbles, big volume. Think of the bars here, wide bars, big volume. Think of it that way. Real dark, like that's dark red, that means it was high negative delta. And you can kind of look at it. It was 353 delta for this bar right here. So we're in this area right here. You got to be careful If you're in profit, you got to lock it in, folks. You had some, you had some people sitting on the bid around this area about 2502, 2500. Um, Now, when it trades up close to the top, it will recenter. Uh, okay, we got some high volume on the positive side up there, but they're not able to push it up. Let's see if they can keep pushing it up. We got some high volume with some good delta on this candle right here because I can see how dark the bars are, dark bars, and they're kind of wide, which means, and we look over on the 1 minute, yeah, we're at 170, 180 positive delta, but I can see it right here, and we're widening, so we got some support right here. So if you want to try to counter trend trade and get a pop back up here to like 060, you need to be holding that. If you start breaking down here, you got to get out. And it looks like we're starting to break down. You have to read this and see, okay, you have high volume with good delta, but we're not able to keep moving. We're not moving. So that's telling you they got absorbed. That's absorption happening. And we kind of sold off. Um, thin volume. We got some thin volume up here because the bars are real skinny. We got thin volume. The volume's starting to pick up a little bit more. You look at the 1 minute right there. If you look at the 1 minute, you had a sell imbalance. I wonder if it's going to get absorbed. You have a persistent selling right there. See, we ran up into this area, but look at that volume. It was very skinny bars compared to the previous 1 minute. Very skinny bars. They didn't have enough gas in there to really push it up. I don't know how I can read the live pulse with the bubbles like that. I'm so used to reading stuff like this. So down there at 985, you got resting orders at 985. What I would like to do, the next update, the big update, what I'm going to do is try to get two windows up there. I don't know what that's going to be like for performance having two windows with a lot of this information. I guess we'll see. I mean, I'm sure some of you out there have got some pretty beefy systems. You might be able to do it. If you're trading off a laptop that's like few years old, you might have a little problem. Uh, or if you're trading on a MacBook Pro like me, running parallels, you might have a problem. I just like MacBooks because that's all I've been on as a software engineer. It's either that or Linux that I code on. But I've been coding on a Macs for years. I've been a software engineer for 15 years, so that's what I code on. We have some resting orders right here. Um, if you're trying if you're trying to counter trend trade again, back here we were running up, good. We were running up, then we kind of came back down, and we kind of consolidated. Now we're sloping down. You want to be below the you want to be below the smooth Heiken Ashley lines. You got a big player that is supporting you right there, and then you're not trying to get the move from here to here and try to get yourself 100 points. That's, I mean, if you get that, that's good. Look at that. Look at that big high. That was 103 lot that kicked off. That was 103 lot that kicked off. So the big dog players that come in with these big contracts and gets filled on them, they show up as bubbles right up here. Okay, they show up as bubbles. We got 49 that just kicked off. See that 49 and on the chart, you see that 49, 37. That's them right there. So you got some players stepping in. Now, are they going to get rewarded? We don't know, but if they get caught, they're going to be selling off anymore. And it looks like they're getting caught, but they're getting caught on thin volume. There's thinly traded volume right here, very thinly traded volume. We can easily jump right back up here to 070 real quick. I mean, you can do that within a second, just be right up there in no time. On thinly traded volume like this, you can be up there in no time. If you see bars that are really wide and dark, that means there's some high volume with high negative delta in that area for that two tick area because I'm tick merging it to two. I mean that's good. There'll be resistance to keep pushing it down. So right here in this area, we got some support right here. So if you shorted this right here because you've got these contracts 37.49 getting caught. If you shorted at 9.44 and you're at 9.34, that right there is 10 points. You need to be selling half and locking it in, folks. You need to be selling half and locking it in. I know I keep saying that. I sound like a broken record, but please do it because people are undisciplined and they're not going to do it. And they're going to want, I want $1,000 trade. Well, I'm going to tell you something. It will happen. You will get those $1,000, $2,000 trades. Earlier, it was a while back. I, I mean, what did I just say? 944, thinly traded volume. We can come back up here very easily. We did it on this candle. Right now, you're at 944, and then you were at 934. You had a $200 profit on one mini contract, and you didn't at least lock in 5 points. I don't know what you're waiting for. That's just how I trade. Capital preservation. I'm like a monkey. I'm just a monkey. I'm just a monkey, man. I see money, I take money. Okay? I'm just a simple monkey trading the markets. I'm just a simple monkey trading the markets. This is oops. We got oh come on. We got this right here. We had a buy and balance area right there with persistent buying. 66 lot kickoff. You see that wide bar, how wide that bar is right there? The opacity, you can see through it. So the positive delta was kind of low. As you can see, it was 551 delta. I mean, it really wasn't that low. For the whole bar, it was 551. But for this area right here, about nine half, that was a lot of volume, but the delta in that 950 was kind of low. It was probably not it was probably 49 three quarters and nine half. It the delta was kind of there, but look at this. You see these bars right here? You see that little wide bar, kind of solid. This area is kind of solid. That's telling you high positive delta. You're not seeing a lot of red up there. So when you break the 956 area, you can put where's your support right here at 9.5. If you start breaking this area right here at 945, you got to think about, okay, am I wrong? You're counter trend trading. So if you get a quick scalp off of this and you're at 956 and it runs up here to 966, that's 10, right? Move to a break even. You start seeing this large volume right here. If we start trading below here, see this previous selling area? If we start trading below there, you see how thickly and see how thinly traded that is? You see how we just like slam down real quick? It's low. It's not an interesting area for these guys. It's not very interesting. It's very low volume, so it's very easy to shoot right back down to 9.5 very, very quickly. It's easier for me to read the market with this instead of the live pulse. And that's just me. Some of you will be able to use the live pulse and outtrade me, and I hope you do. Um, It's just the way it is. I mean, this is really what you want to see when you're counter trend trading. You want to see this area right here, big contract stick in. That's 66 on one order, and we got a nice wide volume. We got dark green up here, and that big contract that kicked off, it didn't kick off down here. It kicked off at least half of that area right there. Okay, that's what you want to see, and then you try to get that pop. Okay, that's what you want. You want to try to get that pop. It just recentered. Um, but that's how you play this. Thinly traded, thinly traded. It's going up thinly and can come. It goes up quickly and can come back down. I mean, uh, what we need to do if we come back down here to 982, we really where your support area is right here. I wish I had a drawing tool on this window I built. Right here, this area right here, 978 to 960, this little 2 point area right here. We had some good volume up in there, and we had some good volume up in here. You could use that as a support area. That's what you want to see. You want to see a big contract kick in right at the top of the candle, and boom, boom, you're shooting up. That's what you want to see. You want to follow the footprint of the big dogs. Follow the footprints of the big dogs. Run with the big dogs. Let the big dogs eat, and you pick up the crumbs. Just eat the crumbs, and you'll make a decent living. Just eat the crumbs that the big dogs leave, and you will definitely be good to go, folks. Just remember, when you're going up in here and you're trading 992, and you're up here at 25.010, you got yourself about 20 points right there. What the heck are you waiting for? You need to be moving to a break even. Manage your trade. If we lose this '06 area right here, it's thinly traded. We can easily come back to your break even, so you sell half. If the market rages up and runs, that's fine. You got the other half that you're managing. Oh, the settings for RTY for Russell, I have, I have no idea. I don't trade Russell. I have no idea. Um, I have no idea. Let's see how much volume does Russell trade. Let me go to CME Group and see how much volume the Russell trades. The ES is pretty thickly traded. Russell, I'm not sure. You'll have to play around with the numbers, even Russell to index futures. Where's the volume? The March we traded 229,000 on '04. So yesterday was 229,000. It's about, let's say 230,000, and then 230,000. But the NQ traded 230,000. NQ traded the volume on NQ for '04 about 600,000. So it'll probably be about half of the volume. Maybe the large volume, you might want to try and go to 10, 15. The minimum volume trade, you can set that to like 2, kind of like the NQ. That's just a minimum amount of volume needs to trade for a bar or a bubble to show up if you're using a live pulse. Like a large volume trade, you need to play around with that. What I can do, I don't know. You need to manage that trade. If you got in on that 194, you need to manage that trade. You're up pretty good. Um, Let me bring up a Dom here. I don't even know what ticker is. RTY. So the RT1 in the March is a thinly traded market, kind of like the NQ. So that trades like a squirrel hyped up on Red Bull, also, I bet. Somewhere it's like 2,000 stocks. RTY futures. Let's tick merge this to 4. Let's see what that is. See what that's like. And then the resting orders. Yeah, you've got some pretty heavy resting orders here. This might be pretty interesting. Like if you go to 75 bubble volume, that's for the big large trades to kick off. You probably want to set that to 75, I bet. You could even set it to 100. Set that to 100. Yeah, so let's go to RTY. Let's just look at RTY real quick. It's tick merged to 1. Probably what I need to do here. Let's close this out. Let's close this out. Let's bring up another order flow pulse. It's 10:45. I made a little bit of money. I ain't going to be trading very much. I'm trying to stream um, RTY in March 26. Minimum volume set it to 2. Large bubble volume, I'd probably set that to 75. Resting orders, let's go to 10. Let's go to a 1 minute. We can tick merge this to 2, kind of like what we do for the NQ, and then we'll click apply. We'll see what that's like. Okay, so the resting orders need to be a little bit more because that's kind of real. That's real thick. That's going to slow the system down. So you probably let's go to 15 and see what that's like. Let's go to 20 resting orders. Let's see what that's like. That's pretty nice. So uh so RTY, I guess it's a thinly traded market like NQ, but NQ is like a, I ain't gonna say that. That's not politically correct, so I'll just keep my mouth shut. Um My dad sometimes told me you gotta think before you open your mouth and speak, and I just did. You see? You see, Dad? I have learned. RTY, March 26, minimum volume 2, large volume 75, resting orders of 20. You could actually even do more resting orders, probably. These are pretty thick orders. You can go to 75. What does 100 even look like? Oh, yeah. You can go to 20. You can tick merge it. The bin stand, it's just tick merging. It just takes like if it was set to 4, it would just tick merge like the whole number, the quarter, the half, and the 3/4, and it just merges it into 1 point. I don't remember what RTY, the amount per tick. I know the ES is 12.5, and the NQ is 5. It's like 5. I don't know what it is for Russell. Yeah, the Russell seems like it's a lot smoother. When I used to spread trade in a personal account, and I used to do this, I used to swing trade futures in a personal account. But what I would do is like let's say the ES moved like 2%, and like the Russell moved like 2.5, and then what I would do is I would short the Russell and then buy the NQ, but I would have to keep the notional value the same. And then once they, because they run in tandem with each other, and they're pretty correlated, kind of like the ES and the NQ, they're pretty correlated. And you like short one and you buy the other, and then when they come back into correlation again, when they diverge, and then you short one, long the other, and when they come back together, you make a little bit of money. Uh, and I used to do that with the ES and the Russell years ago. So right here, we're looking at the Russell 2000, and at the Russell, it is trading a little smoother than NQ. I mean, like I say, the NQ's a squirrel hyped up on Red Bull. Years ago in the pit, they used to call it the Widowmaker. But right here, you have a nice on this candle right here, this 1 minute candle right here, you had very large, wide bars. So that's telling me a lot of volume. And you had that red bar right there that was a little bit lower. Um, and then you had this bar right here, green, that was kind of thick. Uh, so the darker the bar, the more delta it has, positive or negative. So right now we're looking at the Russell 2000. Hopefully we got that guy set up. Uh, 721. Yeah. So hopefully those settings will help you out. Um, let's go. Let's go check out the ES people. We got a minimum volume. Let's say we do, I don't know, 10. We can resting orders. Let's go 50. Let's go. We're just going to tick bin the ES because ES is a thickly traded market. We're just going to tick bin that. We'll just do that. Okay. Uh, it loaded up, and because you see how it kind of paused there, but it was showing the real value. It loaded up because I'm showing past history stuff. It loaded up 500,000 ticks history wise, and I guess it's running pretty smooth. I guess. So this is the ES. This is the NQ over here on the 1 minute chart. The ES, you can do this as well. Probably for the ES, you want to go minimum volume of 10 or at least one bar to show up. It has to be a minimum volume of 10. A large volume for a bubble to show up will have to be like 75. I mean, let's say you do 10. As you can see here, a bubble is going to show up. You know, those bubbles are going to show up. I mean, you can do that if you want. That's just one order. I like setting it to 50 just because it is what it is. We had 82 contracts get kicked off right there. Resting orders of 50, you can actually bump that up to, let's see what 100 resting orders look like. And you maybe go to 80. You gotta mess around with the numbers and find your sweet spot of what you like. Maybe let's go to 75. Okay, you gotta find your sweet spot of what you like. If you try and load up too much, let's say you go here to 20 and you try to load up all of that, well, the chart might be fine for now, but once it goes past an hour, the chart's going to start lagging because you've got too much information for the past hour that needs to be painted on the window. So you got to be careful with that. I mean, I'm pushing NinjaTrader to its limits, to be quite honest. I have tried to tweak out every single little performance I can with order flow pulse. So let's go back to the NQ. Let's look at NQ. We got minimum volume of 2 for the NQ. The large bubble volume, I like setting it to 30. Resting orders, I like setting it to like 10. And we're going to tick bin it. We're going to take like the quarter and a half and kind of merge that data into one. Because it's such a thinly traded market, I like to merge it into one, and we'll see what we got. Whoops. Okay. So this is the NQ. We're trading the NQ. So we had some valid trades. Let's go through some of these valid trades. Oh, all right. That bar right there, very wide, high volume, and that bar right there at 049, that bar right there. Since it's really dark green, that means it was high positive delta for that area. As you can see here, it's very thinly traded. The NQ is very thinly traded. That's why it moves like a squirrel in Red Bull. Yeah, so that was a nice valid trade right there. Right there, a valid trade. We got 174. You could have gotten in there, but you have to understand that that you're having you're got that 129 contract right there. You know, you got to understand that. So when don't be trying to short the tops. You don't want you're not trying to get like 100-point move. You just want a piece of the pie. You will get 100-point moves, people. You will get it with this indicator. You will get the moves with me. I think last week we got a 150-point move that I was live streaming. If you got that, that was awesome. I don't think you'll get a 150 points right off the bat. You might get 50, 75. I mean, that's fine. 50 points, many, that's $1,000. Be done for the day. You good to go. This right here, you have to understand this selling balance. We closed below it. We're sloping down on the smooth Heikin-Ashi lines. There was a selling balance right there, and we closed below it. There was a selling balance there. We closed below it. We had 153 lot kickoff. Then we had some buyers step in. Okay. You could have scalped yourself some right here, but you got to be careful because the smooth Heikin-Ashi lines are sloping downwards. And the smooth Heikin-Ashi lines right here are taking a Heikin-Ashi chart. A Heikin-Ashi chart, let me bring one up and explain this to people. You know, I don't like this tick bend on the NQ to 2 points. Let's tick bend it to 4. So right now you're trading like 2501, 2502, 2503, 2504 for each bar. Each bar is 1 point. It's taking the data and it's merging it together. Basically what and I do this for the DOM as well, but I wanted to do this, and the reason I wanted to do it is because the NQ trades so crazy. I want it basically you can merge into 1 point and it just smooths it out a little bit easier and you can start reading it a little bit better. Same thing with the DOM. If you bring up the DOM, I mean the NQ, you see how squirrely it's trading? Well, if you tick merge it right here and you see how it's showing quarter, half, 3/4, if you tick merge it to 4, now you're showing 090, 091, 092. It just merges everything. It merges the profile volume. It merges the delta together. It merges the resting orders. You know, it just merges everything together, and you're able to trade a little bit smoother, be able to read it a little bit better. That's just me. Okay. So we're going into 11 o'clock. I'm not trading, I'm not clicking buttons past 11:30. You know, I made a little bit of money this morning. As you can see here, I made a little bit of money, three quarter, made 3/4, made a little money. Uh, that was an eval. I didn't trade a funded account. I made a little bit of money. I did miss some trades because I was, talking. It's hard for me to walk and chew gum. I'll get used to it eventually. I'm used to just sitting in my office listening to my music on my headphones and being in my own little world. Just me and Mr. NQ. I just sit in my office with my headphones, listen to a little bit of music, and try to get one with the NQ. So what do we have on the 5-minute chart right here? 5-minute chart. 5-minute chart, Mark is kind of going around 5-minute chart. We kind of ran up. If you got some of those trades, that was good. I think that's where I made that 3/4. Then we kind of sold off. Then we got some sellers that got trapped. Now that 138 really wasn't trapped because we opened up, we sold off, we kind of closed right there at the 138 lot seller. But the thing is, with the smooth Haganashi lines, they were definitely separated, and they were sloping upwards. They were sloping upwards. The smooth Haganashi lines were sloping upwards. I'm going to put up educational videos for the 2 add-ons and the indicator that I have. They're going to be on the site. They're going to be educational videos. Now that I got these pretty much done for a beta mode, I can start doing educational videos and throw it up on the site, and it'll just be linked to YouTube. But you can log in and go to the educational section here pretty soon. 138, that really wasn't underwater. Now that 172, that 138 and that 172, we came down here and we kissed the uh, the current smooth Haganashi line. We kissed it and then we closed above it. So when we closed above it, that 138, 172 is underwater. They are taking heat. And then we had a buy and balance area, stacked buy and balance area of 4 times more buyers and sellers on a 3-point level. And we kind of closed right here. So we kind of got a little absorption up there. But once we got going and we broke this, we kind of came up here. Then once we had that 200 lot kickoff, they got absorbed. Once you see that 200 lot get absorbed and we're closing down here, you can take a quick short right here. But you got to understand with the market conditions that you're in. You got to look at the big picture. If you're trading off the bubble or you're trading off of this chart right here, you have to understand the big picture. The big picture is we were moving upwards. So if you tried to short right here, and this is a valid trade because it's a trapped 200 lot buyer. It's a valid trade, but you got to understand when you're in this candle and you're moving down here and you break that level, when that was that 100. So once you're down here, okay, and you start coming down close to this line, and you're at like 25-point winner, that's a $500 winner for a mini. If you're in 10 micro contracts, please pay yourself a little bit and move to a break even and manage the rest of the trade. I don't care what these gurus on YouTube are telling you. I'm not a guru. I'm just some dude that's been trading the futures for 10 years, and I've been coding, slinging code. I've been a code monkey for like 15 years. Please don't listen to these gurus. I get a 3 to 1 or I take a full stop out. BS. I don't. If I'm in this trade and I get 10 points, I'm moving to a break even. If I get stopped out, I don't care. Next, move on. If I get stopped out 2 or 3 times before I get a winner, great. I don't care. Capital preservation, because I was trading the markets before these fake prop firms came out. I was trading the markets before the micros came out. So I had to learn capital preservation because after blowing up $3,000 accounts left and right, and I started losing about $10,000, that's when I realized, I'm like, maybe I need to learn how this daggone thing trades. Okay, you have to. I'm so into, you get a pop, pay yourself a little bit, and move to break even. Okay. And then we came down here and then we kind of sold off. We had that 174 lot kickoff, but you got to understand where the market conditions are. The market conditions were right here of, hey, you had these buyers right here that were going to defend that area. They didn't defend it very well. They just kind of dumped it. So maybe they took their profits. Who knows? But it traded right through them with a vengeance. Okay. We had a stack sell and bounce right here. We had a stack sell and bounce right there, even on a 5-minute chart. If you want to trade a 5-minute chart, you can trade a 5-minute chart. Okay, where's your stop? Probably up in this area right here. Okay, up in that area. And then you come down here. And once you start seeing buyers step in, like up in here, and then at 153, you want to be paying yourself down here. When you see a 66 lot kickoff and we're kind of trading up, you want to pay yourself a little bit, about 60 points. You want to pay yourself a little bit. Always pay yourself. And I've also wanted to always pay myself, and I get into that philosophy because during pre-market hours, a while back, I was trading with Lightspeed, and I would trade these low float pump and dumpers pre-market. You couldn't use market orders. You had to use hotkeys to get in and out. So that's what I did. When I got a pop, my motto was you either pop or I drop. So when I got a pop, I would sell half. And then once we'd be losing steam, I'd be out. I'd be done. And if it ran without me, up a dollar, who cares? I just move on. I just listen to the next news that just comes out, and then let's see where they were going to push the next pump and dump. So that's where I get into pay yourself. You get a pop, sell a little. You don't have to sell half. I'll say you got 10 contracts, sell two, move to a break even. The delta is not moving very much, so sell a little bit more. If you get a delta surge, then you got like six contracts left. You know that's just how the game is played. Don't be listening to these gurus and being like full porting and passing evals and blowing evals. Don't be listening to them, please. Just don't listen to them. Um, we got some resting orders up in here on the NQ March contracts. I've tick merged it to 4. Um, I have a selling balance. We're kind of flat line on the smooth Haganashi. We're kind of flat line. You have to understand that we're right there at support right there. Okay. We're right there at support. You got about half of it is selling. The other half is buying. Got that 208. If we break through that, yeah, you come back down here to the 030, kind of like what we did here. You just got to be careful. Lock in your profits. Take them when you see them. Move to a break even. Manage the trade. Will the DOM be scrollable? Um, yes, eventually, yes. Um, yeah, it will be scrollable. I just have to code that in. The thing about that is I'm taking a blank window. So this, the DOM. So the DOM right now, if you tick merge it to 4, right now the DOM, it it loaded up. How much did it load up? It loaded up 237 ticks, 237,000 ticks for history. I mean, you can resize it and it will recenter for you. But yeah, you can't scroll right now. It will eventually be scrollable. Because right now, when it comes down to a certain level, it will just recenter automatically. I wanted to get the main features in it in the very beginning. I just wanted to get the main features of a volume profile. We have the bid and the ask, and we have the orders being kicked off here. And you'll notice that these orders will start, the opacity will start fading away. I think it fades away after a minute. I think it fades away after a minute, and then they just kind of go away. But these bubbles right here, we had 172 lot and then a 208 lot. Those were large buy contract, large sell contract. That was like one order buy sell for each one. So those bubbles kind of show up and shows you what area they're in. Like we had 168 lot buyer, 194 down there. As you can see right here, that was the 194 right there. Uh, so it will be scrollable. Um, let me make a note. Uh, oh yeah, let me make a note. The DOM. Let's see, the DOM and the pulse window. You need to be able to open up a multiple. Open multiple. Uh, that should be an easy fix because uh, just remembering what I wrote, it should be an easy fix to be able to have multiple windows. To me right now, I just write the code. I try to get it stable, try to get the performance decent enough, and then just throw the beta version out there or the prototype for the DOM was actually a prototype. I just throw it out there, and see if it's working, see if it's working for people, and then start building in more features. Oh yeah, DOM scrollable. Yeah, I'm gonna have to look into that because that's gonna have to be, I can get the left mouse clicks, because when you click clear, the left mouse click, when you hit clear, it just clears everything, and I normally like doing that right at 9:30. I'll just clear everything so I can get the, volume profile up there. Eventually, I'm gonna have a settings, little, gear icon with the settings, and another window will pop up, and it'll say, you'll be able to recolor, you'll be able to change the colors and do all that, but that's gonna be in the future, because it's just me. Because I have to trade in the morning, I'm streaming, I'm trying to trade, and then in the afternoons, I write code, uh, plus I got a wife and a kid, and, like, last night, I stayed up till 1 o'clock in the morning. I'm on the East Coast, so and I gotta take wait a minute, Tradeify account. A large Tradeify account that was, given to me, nice trade, by the way. I don't know which one you were talking about, but, uh, yeah, it is, it, uh, it does need some tweaks. I wish I had somebody that 150 point trade. Oh, yeah. I think that was last week if I remember correctly. That was good. Yeah, you get those. Yeah, I'm located on the East Coast. I was born and raised in Virginia. Uh, and I moved up here to the Northeast, u up in Pennsylvania. Um, I worked, I lived in Alexandria, Virginia for years, for past, like, 15 years, because I was a government contractor. I worked for Booz Allen Hamilton, a large government contractor. And I work alright, so we got some, support right there. We need to be trading above this volume area. I don't see any dark green, so there's not a lot of a lot of high positive delta. But you can look at the 1 minute over here. We're at negative 47 delta for the whole candle. We're right in that area. We have some high volume, but not a whole lot of delta. We got some support down here on the bids down here are like 985. Um yeah, I worked for Booz Allen Hamilton as a government contractor. I worked, government contracts for quite a few years, slinging code for the government. Yeah, so this this chart that I coded out, because, an add-on, when you do a NinjaTrader add-on, like this right here, this is an indicator. So this gives you the support of the whole window. Okay, of the whole chart window and all that. It gives you all the support, and all you do is just put your indicator up there. So that indicator is fine, and I have the backing of the NinjaTrader system with a trade window. But when you do an add-on, what you're what I started with here for the DOM as well, and also for the order flow pulse, what I start with is just a blank window with nothing on it. No timeline, no price. They just give you nothing. and you have to build everything out yourself. And it's C sharp, and you can use the Windows Presentation Foundation, I think it's WPF. Uh, all this is just C sharp code. So you have to build everything out. So this whole candles right here, everything's built out. The heat map is all built out by me. I have to thread lock stuff. I have to worry about the threading. I have to worry about the garbage collector being overwhelmed. So there's a lot of stuff I got to manage. Um, and it's a slow process. And I looked into last night, and this is going to come in the future. It's not going to come anytime soon because it's a very heavy thing to do. A lot of code to write. What I want to do, like the chart trader for Ninja Trader. The chart trader, you can just come up here and go to chart trader and do chart trader, okay? And that's fine. You got all the buttons and you can manage the trade right on the screen. I can't just plop in chart trader in this window, okay? I have to build all of that myself. I have to build all of that myself to be able to chart trade. Um, right now, I'm just using these windows right here, the basic entries. I'm just using those windows right there, the basic entries. I'm just using them. That's what you saw me execute this morning off of, but just the basic entry windows right here. In the future, you're going to be able to trade off the chart. Now, here's the thing, and I need to really think about this. There's a lot of people that don't use Ninja Trader. And if I can get some pretty good support for the indicator and the two add-ons that I wrote, when it comes out of beta here, and I can get some support from the traders, and I think in the future, I'm not too sure about this, but I think for like a whole year, like everything, when you get a member of the site, you get all the indicators, you get everything. I think it might be like maybe 150 for the year. So that's like, I don't know, $12 a month. And you get everything. There was 39 lot that got kicked off with some pretty high delta. You can probably scalp yourself some off that at 997. But you got to think about you're in a downslope in your counter trend trading. We got some stacked and buy and balance that got absorbed a little bit. But if you're in at, let's say you got in at 2,500 even, that is a pretty substantial level, and you're already up at 013. You're at 10 points. You do not let a winner turn into a loser. I don't care. You take 5 points and you move to a break even. Right there, it would have taken 5 points, and I would have moved to a break even. I don't let winners turn into losers. Absolutely not. And here's the thing. And what a lot of these gurus will not tell you is like, oh, I get a 3-to-1 or I take a full stop out. Well, you go do what you want to do, man. But what I'll do is I'll get 10 points, and what I'll do is probably sell half and move to a break even. Now, let's say this candle forms. This candle forms, and it's an inside bar candle, and it starts forming, and then we break the 016 area up in here. I just get back in. I don't care. I just get back in. I mean, that's just me. I'll take 5 points. 5 points on a mini. That's $100. And then I got stopped out on the break even. Now my break evens are break even. I try to get a +1 when I'm hotkeying, because I built out a hotkey for my own self in Ninja Trader. I can't give it out because there's some quirks to it that just, yeah. I've lost money because of those quirks. It's a little weird. I just haven't had time to fix it. All right, we're running up on thinly traded volume, so we can come back down pretty quickly on that thinly traded volume. And right here we had high volume, high selling volume right there, right where we're at. We had high selling volume, and the delta was kind of average because it's kind of a dark. But if you get this pop, you can get in. You have to be real quick, and you get that pop. You just move to a break even, see if you can't get yourself a runner. If you get stopped out, who cares? You can always get back in. Commissions are cheap. Let's say you take 2 stop outs and you're and you lose like, I don't know, let's say you lose 25 bucks. Then all of a sudden the third let's say you take, let's say you take 4 stop outs. 4 stop outs right in a row. And let's say you're down 50 bucks. Then all of a sudden you're like, okay, this is going to go this time and everything. And a big dog steps in. You got high positive delta, big, large volume, big dog stepped on 200 contracts. And it's right here at the break of it. And it runs from 017 all the way up and you get yourself, like 25 points. You got yourself $500 winner. Let's say and then you just made yourself $450 net. Take when Protect your capital. I don't care if you're trading an eval. Don't care if you're trading a funded account. Protect your capital. Get in the mindset of protecting your capital. Your sanity will thank you. Yeah, Dolestown. Uh, what data feed do you have connected to your Ninja Trader? Okay, I've got 5 funded accounts with Bullnox. So I trade Bullnox with the Rhythmic. This data feed, and I've got a Lucid account. I opened up a Lucid account to test this out as well. So I've got a Lucid account, and I think that's Tradeovate, and this works on that as well, if I remember correctly. So Rhythmic and Tradeovate. Now, if you're doing any other data connections to different brokers that don't use Rhythmic or Tradeovate, and it's not working, go to the profile section. You'll see the email support@orderflowbars.com and send me an email and let me know what broker you're using and what data feed. Uh, okay, so what I was saying earlier, I think I got sidetracked from this order right here. But if you did get in there at 997, you came up here to this area right here up to 05. I mean, that right there is like 8 points. What you want to do is you want to move to a break even because that large volume right there, that was a wide green bar. That was wide volume. You can move to a break even because here's the thing. If you lose this area right here, that volume, if you lose that area right there, more than likely we're coming back down. And that's what we did right here on the next bar. We really couldn't break through this volume area. And we were trading light volume, so we just kind of ran down. So just take a break even or take 3 points. Who cares? Just get out. You can always get back in. Just get out. Move on to another trade. So these sellers could get caught because we have some high volume up here, and we closed above those sellers right there. I can look at it on the 1 minute. I don't know where we closed on these candles. Maybe I want to create a hollow outline of a candle so I can see what's going on, but I got to be careful. There's too much stuff on the chart. Um, if we can break 981, we could possibly come up here and test this area again up here at the 05 area. Maybe you can get yourself a 10 point scalp out of that. But it looks like we're breaking down. And we got support right here on the resting orders. And we kind of bounced off of 941 up to 961. That was what, a 20-point bounce. But think about where you're at. We are definitely sloping down, as you can see on the pulse window. We're definitely sloping downwards. And look at this. We're running up and we're definitely sloping down. We're sloping down on the 5 minute. Okay. If you look at the 5-minute, we're sloping down as well. We got a 73 a 73 lot that just kicked off. That's one order of 73 contracts. Okay, that's not a retail trader. That's an institution with that size. It could be a retail trader, but if it is a retail trader, he's considered a big dog himself. So, or herself, whatever. I don't know. I'm not politically correct. I don't care about both parties. I hate them both. Um, but we had support down here at 941. We had some resting orders, and it looks like we bounced off of. These sellers can't get past these resting orders right here. They're getting absorbed. So if they're getting absorbed right here and they can't push past 941, we could possibly start moving back upwards. If they start getting absorbed, we could possibly move back upwards. The thing that you have to understand is right here on the 1-minute volume, if you look to the top right, the 1-minute volume, this area right up in here, we got to get past that area right there. Okay, because there was a lot of selling. You see that 153, that 153 was this right here. So we got to get past this bubble volume profile that had a lot of selling in there. We need to get past that. Okay. More than likely, they're already out because we ran up here and they ain't going to be taking that much heat. I mean, they might. I don't know. That's just my thesis. I don't think they'll be taking that much heat. Well, they got absorbed, so now they're probably getting out because they don't want the risk desk calling them, asking them, "What the heck are you doing in the losing trade? You're down, you're down $50,000. You're down $100,000. You're shut off for the day, you idiot." They don't want the risk desk calling them. They're like, "Oh, screw this, I'm out." Yes. Okay. Here's the thing. For level 2 data, here's the thing. Like for Bull Knox, I have level 2 data. We got some positive delta up in here. We got some green. We definitely got some shorts coming out. We're thinly traded. Your support area is right up in here. Okay, your support area is right up in here. If we break the 996 area, we could come back down because this is thinly traded right here. Thinly traded, and with the thinly traded area, you come down real quick. Um, yeah, you're going to need level 2 to get the heat map. You're going to need level 2. Now, what I do with Bullnox, because I'm on Bullnox and I've got some funded accounts with them. I got a handful of evals too I need to pass. You got you need level 2, but here's the thing, do not pay for everything. Don't be paying for everything. I go with Bullnox and I only pay for what I need. And mainly I trade in Q and I only pay like $14 a month for level 2 because I only get what I want from the CME. I only get what I want. I don't trade gold, so I don't have that level 2 data. I only have like ESNQ, what I can actually what I actually trade. Um, so don't be paying for everything when it's not needed. In my honest opinion, you really need to be sticking to one instrument and really learn that instrument very well. You gotta be married to that instrument very well. Been married to my wife for many years. I understand when to open my mouth and when to keep it shut. Or sometimes I like to mess with her. Um, 35, 30, 73 lot. Yeah, they got absorbed right here in this area. Those resting orders, they got absorbed and we kind of moved up. So we moved up. If you got in on this area right here, okay, this area right here, if you got in, let's say you got in at 970 and you ran up here to 2500, right up in here, and you got 30 points. I don't know what the heck you're waiting for. You need to pay yourself. I don't know what you're waiting for. Are you waiting for a 50, 100 point run? I don't know. sell a little bit, move to a break even, and start yelling at the screen to try to get 100 points. Um, you got to think on the 1 minute chart. On the 1 minute chart, you got to think about this area right here. We got to break through that area right there. And then the next stop could be up here at 060 around this area, maybe. What is it? One. Alrighty. Yeah, be careful up in here. If you're playing off those absorbed sellers that I said earlier, when I saw it 73 and we couldn't break this resting order and we started coming up here, and you see this volume right here, this cluster volume right there. Yeah, they got absorbed. They couldn't break through the resting areas over there at 941. This area right here, 940, 941. They couldn't break through, so they got absorbed, and then we kind of moved up. I mean, you could have gotten yourself 25 points out of that. 25 points, that's four or $500 on the one mini. That's about two. You probably could have gotten yourself about 200, $300 on some micros. And the thing is, if you want to sling around a mini and that's all you want to sling around, why not just do 10 micros? And then when you when you get a pop and you get up into this area, you can sell like five of them and then move to a break even, manage the trade, try to get yourself a runner on five contracts. There's no need to be slinging around those big boy contracts if you can't. If you're slinging around minis and you're trying to play the big boy contracts and you take a little bit of heat and you're uncomfortable, that's your mind. That is your mind telling you, I'm in too heavy and I don't like this, which means you need to size down because you're not going to make good decisions. Candle closes the opposite direction of the big order. Well, not really. Which kind of what I looked for when I saw that 73. See right here, you got a 35 lot. It looked like, and a 30 lot. Those are one contracts, and we had high volume up here because you see that bar right there is really wide. Plus that bar is wide, and then we kind of came down here, and we have the resting orders right here. So right here, I wish I had a drawing tool in this window I coded. 941, 940, 941 that bounced off of there. They did not get, they couldn't break through and keep traveling down. So that was right here, but you do not pull the trigger. Do not pull the trigger right here. Some of these people, they will pull the trigger right here and they get rewarded, but they might pull the trigger right here. And if we break and then 5 points, they're out and they take a small loss. I don't try to get the whole move. I try to get a piece of the move. We came down here. We could not break through. Okay. And also another thing that you want to notice on a trapped sellers right here, trapped sellers, what you need to understand is you came down here, you have some resting orders. The thing on this candle right here with the 73 lot that kicked off, they're trying to push it down. They did not trade below. They did not trade down here to 9.25. They couldn't even get down there. So that's telling me it can't even make lower lows. Okay. And we have some resting orders right here. So that's telling me they're getting absorbed because they're not being able to push down. Now, when you have the next candle, you want to wait for the next candle, like this candle right here. Once we start trading up into this area where you had some good volume because it's a wide bar, once you start breaking that high right there, you've got these sellers right here thinking, okay, I'm taking a little bit of heat. Maybe I made the bad decision and they just cut early and when we get a small pop. You want to, uh, yeah, you just want to wait for confirmation. Did this that 73 lot? It could not break through those resting orders. And also, even without the resting orders, even without the level two, okay, you can this will show up and that 73 lot will show up. Okay. Even on this right here, even on this right here. Okay, even this right here. Yeah, you got a 35 lot and a 30 lot, and we closed above. They got absorbed. We got this right here that ran down. You got a stacked sell imbalance and was running down. You'd be looking for a short right here, possibly be looking for a short to move it down. Okay. But then we had the 73 lot. When you start moving up, we had 73 lot defend this area. A 73 lot did not break down past here to 941. Couldn't even break a low. Couldn't even break the low of that. That right there is telling me absorption because we closed above. Now you have a trapped seller. So now you want to look at this candle here and be like, okay, I could possibly start testing the waters right here once we start trading above. Maybe you throw in 2 micros. Then you get a buy imbalance. You throw in 2 other micros because you're breaking that high right there. Okay, so now you're in the money. Then on this candle right here, you got a buy imbalance. You're trading above it. You're starting to trade above the Heikin-Ashi smooth lines. Maybe you add 2 more contracts. Now you're in 6 contracts. And your cost average would be roughly probably in this area here. And then you run up here, you see a buy imbalance. We're not breaking the high. We're selling below that buy imbalance area. And you finally decide to get out right here at about 30 points. Make yourself, let's say you're in five micros, you make yourself about $300. Hope that makes sense. Uh, uh, okay, it's 11:30. Well, I'm done trading at 11:30. I can probably keep streaming a little bit more to about 12. Um, but I'm done for today. I only trade from 8:30 to 11:30. If I make money, I'm done. If I break even, I'm done. If I at a loss, I'm done. That's just my rules. So right now we're in a consolidation phase area. The market likes to find value. Okay, the market likes to find value. Um, and right here, the market ran up. The market ran up. Okay, so we kind of pushed up. And then right here in this area, you have a little auction going on, a little auction market theory, just a little bounce around, bounce around. It's a balanced market. It needs to find more value. Sometimes it finds the value and it breaks this little area right here to the upside. Okay. And then the market will search for value. Here, the market is searched for value and they said, okay, the value is down here. And then we kind of moved back up in this area right here, past 5, 10, 15, 20, about 25 minutes right here. Had another little auction area going up, down, up, down, up, down. Okay. That's a balanced market. The market likes to trade, uh, find value and then trade a balance, and find value, trade a balance. Normally, that's what it normally likes to do. Sometimes it goes all whacked out on us and it goes all crazy in one direction, and that's fine. But you just have to understand that the market moves up, it gets to balance, tries to find another value area. Sometimes it's up or down. Sometimes in that balanced area, it will poke down and come right back up. And when it does that, if it starts selling down, you have to look at the speed of it selling down and also look at the speed of it being pushed back up into the balanced value area. When the market sells off real quick and then all of a sudden it shoots right back up into a balanced area, you got some strong buyers are willing to push the market and stay there. So that's why you really have to not only just look at the candles, you have to look at the speed of the volume coming in. And I kind of I look at that on a dom. Back in the day, when I just dom scalped with like Jigsaw Trader, uh, you got to look at the speed of the tape, and also right here, the speed of this right here. This more than likely is so thin volume, it probably shot up and then it shot right back down. I don't know because I wasn't really paying attention, but it probably shot up and shot right back down. Right now, this is kind of right here. We got some resting orders up at 050. Well, then they kind of went away, but it's getting into lunchtime area, so you probably not see much action, most likely. Screenshots, market data agreement, yeah. Okay. Let's see. 11138. Balance for now. Yeah, right now the market's just in a balanced area. Um, See right here, I'm kind of sold off at 174. That was a nice little trade. Um, and then up in this area right here, it's just balance and then try and find value to the downside, and then we're just kind of trickling up because it's getting close to lunch. We just trickle up. Maybe we'll stay in this area. We don't know. You need to look for the participation of the big players, and they will decide where they want to push it. Oh boy. Yes, we're moving down. Um, what you're really looking for, and these are some pretty decent trades that you can take. Um, what you're looking for, like right here on a 1 minute, and this shows up on the pulse on like a 1 minute. And this has 1 minute, it goes down to 30 seconds, then 15 seconds, then 5 seconds. I mean, I used to hyper scalp on a 30-second chart. I mean, you can do that, or you can do live pulse. What you're kind of looking for is you see that 153 lot right there? That would be a nice little scalp to try to get uh, to try to scalp the market, and you got some trap traders right there, those buyers. And if you get in here and you try to short the market and you see that 66 with a buy and bounce area and you're in right here, go ahead and take your small loss. Just take the small loss and be done with it. If it trades up and it comes back down here and you can always get back in and try to get yourself a nice 25, 50 point run. Okay, just take a small loss. There's no need to take a full stop out up here. Okay, there's no need for it. And then you're down $400 and then you're kind of ticked off. There's really no need for that. Admit you're wrong and take your small loss. Okay. Um, because your winner is going to be pretty decent and you could probably outtrade that. Like yesterday morning, the first trade of the day was $400 loser. Second trade was like a 325, $350 winner, something like that. And then the third trade, I got positive and I was small green for the day and I was done. Okay. Big deal. Admit when you're wrong and just take your small loss. Okay, and I mean, this is a valid trade to take. I mean, we're definitely sloping down. It's a valid trade to take. It's kind of hard to take it because we've moved so far that would be kind of risky to take. And if you do want to take it, you need to keep a tight stop because I mean, heck, We already done moved from way up here, and you're trying to short down here when we've already moved 190 points. I mean, my word, you're trying to short it more? Yeah, but if you wanna try to short the lows and you really wanna do that, just keep a tight stop. But what you're really looking for is you got a 174 4 lot, okay? And we're breaking this area, but you need to understand you gotta keep when you're in profit, just go ahead and lock some in, protect your capital. Okay, if you can take some heat up here and take like a 20 point heat, that's fine. You can probably get yourself $100 winner. Uh, but here's another thing that people need to understand is if you're trying to trade this right here and you're in a short and it moves back up here and you're uncomfortable with trying to short here and it moves back up here to 30 points and you're down like $600 and you're like, "Oh, man, I don't like this." You're in too heavy. You need to switch to micros and just trade a handful of micros. And then when you get these sell-offs, you start paying yourself. Sell one micro. Come down here. Come down here in this little inside bar, sell another micro. Come down here. You got you got a little spending top can, a little doji, whatever. Sell another micro. Come down here. You see all these buyers coming in. You start trading up, and just cut the trade. The rest of it. I mean, you can't do that when you're trading one mini. You can't do that. And also, this is what a lot of people need to understand is how often do you questions? Well, I'm trying to do them every day at 9:15. Sometimes, I mean, sometimes I gotta leave around 11:30, but I'm always on at 9:15. I'm gonna try and be on at 9:15 always. I'm gonna try and do that. Uh, I'm gonna try and be on at 9:15 in the mornings. Okay, we got a 33 seller that kicked in right here. Got a 33 seller that kicked in. Could get squeezed. It's not a lot. It's not a big seller. It's not a big seller. And also, it's 11:50. Trade from 9:30 to noon. Just go ahead and trade 9:30 to noon. Uh, I'll say you make $500 and you want to trade late afternoon because you have the time. Size down. Size down. Only trade like one or two micros. Size down. Don't be giving back all your profits. Don't be taking $500 winner and then end up with the day with the $200 winner. Size down. And if you take $500 and then all of a sudden you're down 300, you need to really think about stopping for the day and just come back. You only need one good trade a day. Okay, so we have a 33 lot that got caught a little bit. We closed above it, as you can see right here. We closed above it. We got some high volume right up in here. We got some high volume up in here, so that is support. Okay, so if you got in, let's say at 042 and you're up here at 053, you got about 10 point. You just need to sell a little bit, move to a break even. That's it. Just pay yourself, move to a break even. You got to grind these accounts up slowly. And one thing that I really want to get through to people is you're not trading a $50,000 account. You are trading a $2,500 account. That is your blow up. Is $2,500 with bull knocks on a $50,000 account. You're not trading $50,000. You're trading a $2,500 account because that's your blow up. When you lose $2,500, it's game over. You're done. So you're trading a $2,500 account. I don't care if they're giving you the ability to sling 7 minis. They want you to blow up. That's how they make money. The odds are not in your favor. So how do you put the odds in your favor? Well, if you got a $2,500 account, let's say you're slinging a mini and you're doing a 20-point stop out and you're trading a $2,500 divided a 20-point stop out, which is like $400, you can only take 6 losing trades in a row and you're done. Okay. But what if you take 5 micros? Then you got about 12 trades that you can take. That's the key. Capital preservation. You're going to have drawdown. You're going to have drawdown. I got drawdown. You're going to have drawdown. I've been trading for 10 years. I still get drawdown. Um, that's the key. You're not trading a $50,000 account. You're trading a $2,500 account, and you need to size to that amount. If you took your real money, let's say you took real money, $2,500, real money. You open up with a broker. Let's say Ninja Trader. You open up with Ninja Trader. You got $2,500 in the account. Are you going to be slinging around minis taking $400 stop outs? No. Are you going to be slinging around about a couple micros? Yeah. Yeah. See, that's the thing. People try to pass these evals, and I do too. I do too. The fake prop firms have gotten me into the mode of, okay, I got a handful of evals. I'll just sling a few minis and pass it real quick or blow it up. Yeah, I do it myself. I can't say I don't, but I do. Okay. Last week I blew up an eval. Okay, big deal. Okay, that's just me. Funded accounts, different, different. Okay, so we got that seller. We didn't push up very much. If you did get that, let's say you wanted to try and trade that 33 lot. It wasn't a whole lot that got trapped, but let's say you did try to do it and you came up here and you're up here and you're like, yeah, and yeah, no. Well, for one, it's 11:45, so I wouldn't be trading it. Okay. And there's better setups to take. Let's see if I can't find one. There's better setups to take. I really can't find one. There really is not one to be kinda. Uh, well, we can just slightly do this. Okay. So this is around 9:55. This is a great time to trade. Okay, the market has settled down. First 5 minutes are a little bit of wacky. Uh, let the market settle down. Right here, tell and tell, you've had stack sell and bounce that got absorbed. Okay. We didn't trade below it. We did not trade below it. We did not close below it. Stack sell and bounce. Stack buy and balance. Got absorbed. So we're kind of in between. You don't want to be taking trades right now. You don't want to be taking trades. We moved up. We pulled back. We had sell and balance and we closed above it. You had 4 times more sellers than you did buyers. They got absorbed and we started closing above. Okay, so you could possibly take a trade on here. You'll be pulled back. You took a little bit of heat, not much, and then you closed, and then you come up here. You see that 200 lot, but then we start trading below here. You just cut the trade and you just take your profits. Okay, let's say hypothetically, let's just say, uh, okay, that's during market first 5 minutes. Okay, here we go. Here we go. This is a good one. Well, it's not an A plus setup, but it's a setup. So we had 44, 168, 185, 129. We have some big boys coming in. These are one executions. These are not multiple executions. I haven't coded in order slicing yet. They order slice. They'll take 100 lot, and then they'll just go ahead and the market maker will fill them off of another institution of 100 lot, and then the CME will print it, and then we'll get the information. Or sometimes they'll be like, okay, I want to buy 100 lots, but I want to buy uh 10 orders 10 times within like 100 milliseconds or 200 milliseconds, and it'll fill them. And then they have the same trade ID. Trade ID. We're not privileged. I'm not privileged to that trade ID. I don't. I'm not privileged to that. Only the institutions are, and they see it. They see it. They play off of each other. Um, and then we kind of move up. But let's say on this candle right here, this inside bar candle. Let's say all of a sudden you saw 100 lot purple bubble, blue violet bubble with 100 lot sell order. You're sloping upwards. You're bullish on the Heiken Ashi. You're sloping upwards. That is a trapped trader because we traded above it. Let's say it was right here at like 040, like right here. We had a big sell and we closed above it. The next candle, we're not trading below this low. So, uh, they don't have the steam to push it down. So that 100 lot is once we start breaking the candle right there, you can go ahead and get in and start moving up and taking profits as you're moving up. Okay, you need to play off the pain of the institutions because they have to be accountable for the risk desk. They have to be accountable. Okay, and they have a limit. These institution traders, they have a limit. Some of them, they have a limit of, hey, you can't lose more than $100,000. Okay, and then you shut off for the day. I mean, if you keep doing that, then you're fired. Get out. I mean, that's just the way the game's played. So you have to play the pain off of these institutions, or it could be an algo trading. Okay, it could be an algo doing that 100 lot sell. It could be an algo trading it. Maybe it read something that we don't know, and and that algorithm threw out a 100 lot sell order. Then all of a sudden, it moves against them 5 points, and they're like, "Yeah, I'm done. I'll go into the next trade. I'm done." You got to play off the pain of the algos and the institutions. Uh, and you can do this on a 5 minute chart like this. 44, 168, 185. We had a nice push up at around 935. I think it was 935. Yeah, 935. We had a nice push up. We had 129. We had a 30 lot and a 129. We kind of closed below. We're like, ooh, taking a little bit of heat, but I ain't going to be shorting it because we're we're definitely in an uptrend right here. So we had a little small pullback. You had a 138 kickoff. Yeah, we're not taking heat. That 172 sell order trying to push the market down. We closed right here. They're taking heat. You can get in here. Where's your stop? Your stop's down here, and then you can get in. Let's say you get in around here, and your stop's down here at 50 points. Well, that's about $1,000 stop, and then you get in here and you start taking. You see that 200 lot, but they got absorbed up top because we closed below, and then we start closing down here, and you take yourself 80-point profit. You just have to read the market. Just keep it simple. Just read the market. Don't put a whole bunch of crap on your screen. It if you don't if you don't trade off of these imbalance areas, I like trading off of them a little bit, and also a little bit of for confirmation of for absorption and stuff like that. That's why I keep them on there. But you don't need to keep them on there. Persistent buying and selling, you don't need to keep that on there either. Uh, you can just keep the bubbles on there and just trade off of that. And let's say you want to trade off of, let's go over like the 1 minute. I usually set it to 30 for the NQ. Just, I mean, you can set it to 10, 20, whatever you want to do. Um, but I kind of use the imbalance areas like this right here. Sell and balance got absorbed, and we're starting moving up. And this is a trade from my old playbook that I used to do. Is we would be moving up, and then I would look at the 9 EMA. If you take the 9 EMA, it's going to be pretty close to this, to be quite honest. Um, I would look for an inside bar like this, because we've got a high, we got a low, we're running up, we've got a little pullback. I would look for an inside bar like this, and get a break of that, and put my stop down here, and then just kind of scalp it out. And I would play off of a 1 minute, a 5 minute, and a 1 minute, and look at the DOM and just scalp it off, and see like, hey, where's the delta areas, things like that. Uh, you look at the DOM. If you like to trade off the DOM and scalp off the DOM, you have to understand when you get up here to the 2288 area, there was a 130 lot order, one execution that kicked off here. You got a negative 394 delta. When you start trading up in here, now up in this area right here is a thinly traded delta. So it's not like a really area that you should be interested in. You want to be trading either come down and try to find some support with some positive delta and bounce off of that. But you got 394 negative delta. So when you come up here, you have to understand there was 394 negative delta. There was more selling than buying. That right there is resistance. Uh, but that's like for the whole orders of all the ticks that got calculated, which is about 290,000 ticks. You have to understand that could be resistance. Okay. It could be resistance. It doesn't mean we're going to bounce off of it and trade lower and get yourself about 10 points. I mean, we could just slam right on through it. We don't know. But when you run up and you see a little micro pullback like right here, what you're looking for is you want to go to the DOM and then be like, okay, do I have a support level? We're pulling back. Do I have a support level? I need to be able to read the tape. Do we have bids that are stacking that are supporting me? And you're looking for a breakout. If you're trying to look for the breakout of this, because we ran up, we have a little micro pullback right here with the doji candle, and you're trying to break the high right there and get yourself about 5-10 points. You need to understand and look if you're on the ask right here on the offer right here, and then all of a sudden you see some red dots right there, which means a bubble volume of 50. There's resting orders of 50 or more that could be resistance, and that might not let you get those 5-10 point scalp real quick. So that might not be a valid trade to take. You might not want to take it. But if the offers are thin are real thin up in here, then you probably get yourself a quick 5-10 points. Oh, right, it's 12:02. I don't know what I smell something the wife is doing in the office. Is pretty close to the kitchen. When we get a different house, move my I need to move it so I don't smell anything. Um Yeah, we're just slowly kind of grinding up. As you can see here, we're just sloping upwards. I wouldn't try to be taking any shorts. You need to be trading, but down. Okay, this right here, this area right here is not sloping down. Because look how the Heikin-Ashi, the, the close right there of the Heikin-Ashi, look at that. That's still sloping upwards. The open and the current right there at that time was kind of flatline. You want it to look like this, okay? And then you can try to get yourself a quick scalp, okay? Because you're in the right direction. The momentum's down. Let me bring up a Heikin-Ashi chart real quick to show people what it actually looks like. A Heikin-Ashi chart, okay? If you come here, I think it's on the 1 minute Heikin-Ashi. Let's do a base period, a minute, period volume of, let's just do 1 day, okay? I don't want to keep doing it. Let's just do 1 day. Okay, this is the Heikin-Ashi chart. It just kind of tells you um, where the volume is. Um, yeah, that order was my one trade I did this morning because I've been trying to stream and talk at the same time, and it's hard for me to trade. Um, so I just traded one. I traded today, and what I'm up 300 and a quarter. Okay, no big deal. Maybe what I need to do is, maybe pick 2 or 3 days to stream during the week and then just in the office, just sit and listen to music and just crank out some of these, funded accounts. Um, it's hard for me to walk and chew gum at the same time. A Heikin-Ashi chart, as you can see here, what it takes is it takes the open, high, low, close, and divides it by 4, and you just get like an average, okay? You just get an average of the bar. So you get the average of a bar, and uh, let's come over here. The average of the bar. You see that right there? That 120 lot that kicked off, and we have some stacked buy and balance. I mean, that's a valid trade. But what you need to understand is where are we on the 5 minute? Well, 5 minutes looking good, so that could possibly be a decent trade for you. So if you get in here at about oh 09, up in this area right here, if you get in right here, your stop needs to be down here. And if you're comfortable with that stop, then go ahead and take the trade if you want, if you're comfortable with it. It looks like we're trying to break out, okay? But keep it tight because we have this resistance area right here where that 174 is. We got that little resistance area right there. Okay. So if you took this trade right here and you got off, let's say halfway through there and you're already up 12 points, what you need to do is move to a break even, protect your capital, and start reading the I was getting ready to say start reading the tape. Okay, so we had a 120 lot kickoff, okay, and then we had some selling right here, okay. We kind of moved down to the imbalance area. We had some selling. That support right there is right there, that 120 support. What you need to do is understand that those 42 lots, if you're already got in, traded off the imbalance area, let's say at 105, and you're already at 121, I mean, pay yourself a little bit, move to a break even. I can't say it enough. I can't say it enough. Move to a break even. I cannot say it enough. Take a little bit, move to a break even. Because you're looking, this volume right here, that was high volume. You got a 42 lot that kicked off with some high volume right there. Okay, and let's say your entry point was down here off that imbalance area right there. Let's say you got in right here at 105. You're at 115. That's 10 points. You need to move to a break even because this is a thinly traded area right here. We got thickly traded area right here. We needed to keep going. We needed to keep pushing. But once you start trading below this area right here, you just need to take your small loss. I don't give a crap if it's 5 points. Take it. That's $100 on a mini. Take it and move on. Okay. I don't care if it's $50. Okay. It's better than taking a full stop out and losing $300-400 and you're pissed off. You got to understand how this beast trades. NQ, I've been trading this thing for years. NQ, it is called the Widowmaker for a reason. This thing is so daggone squirrely, it's hard to trade, and it really is. The NQ, I'll be quite honest with you, the NQ is not a futures market for a new trader. It is not. It is not. The NQ, you have to trade this thing and really understand how this thing works. It's called uh, the second chance something. I can't remember. But it gives you second chances so many stinking times. So many stinking times, and you probably know this. So many stinking times you get into a trade and you take some heat and it bounces up to your break even and you're hoping for a winner and you didn't get out and take a break even trade and all of a sudden it slams down and you lose $500. Well, I'm sorry, but it gave you the second chance. It gave you a chance to get out. You took, let's say you took $200-300 heat and it comes back up to a break even. It's telling you, hey, I'm giving you a chance, get out. And guess what? Sometimes that second chance and you get out on a break even and it just runs up and you're pissed off. Okay, big deal. Move on. Yeah, this is NQ is not a market for a beginner, to be quite honest. Go trade the ES. That's a thickly traded market. Go trade the ES. I mean, your market conditions are right here for you to understand that you came up here and you kicked off on that area right there. You're up into this area with this 174 right here. That is a big, that's not a retail trader slinging around 174 contracts. Okay. They came down here. More than likely, they took some money. You got some institutions that are going to push this thing around. Okay. And you come up here and you start losing steam. You come up here, come down here, you get in. I'm like, yeah, this is good. Boom, we pop. We got some more buyers stepping in. You're like, okay, let's go. Oh, we didn't get a pop. We got a buy and bounce area right here. We're trading down. I better get out. I just better take my break even trade and get out, move on to the next trade. Oh, guess what? Move on to the next trade. You got sell and bounce. You can probably possibly take a 10-point stop out right here. Take a $200 loser, and then sure enough, maybe you want to take this trade down to this support area and make yourself $500. Okay, you net $400. Okay, admit that you're wrong, and you'll be better off. Admit that you're wrong, and you'll be better off. That's really all I can say is admit you're wrong, and you'll be better off. I think my wife kind of says, "Well, you're about 60 to 70% right. So that means 30 to 40% of the time you're wrong." So when she talks with me, sometimes I'm sure her mentality is, you know what? He's 40% wrong most of the time in the market. Um, yeah, you just got to understand where you're at. You got 120 lot. You got a big boy trying to push that. You got a big dog trying to push that market. You got buy and balance. Great. Great. We traded back down. That's a perfect A plus setup for me to take because we're sloping upwards. I get in. I see some more buying up in here. I'm like, okay, we're gonna shoot up for a 50-point winner. Nope. It starts trade. Once it starts trading, once it starts absorbing that 48, those buyers, that 48 contract buyer, once it starts absorbing that, and you see a buy imbalance and it starts trading back down, and my entry's right here, and I'm right here, I'm getting out. If it bounces back off and then I see it raging back up, get back in if you want. Commissions are cheap. Admit you're wrong, move on to the next trade. That's all I can say. Admit that you're wrong and move on. That's all you can do is admit you're wrong. So if you don't know already, the CME group is doing something fantastic. This is going to be great. This is just as big as when micros came out. I remember when micros came out. I wish I was slinging around micros when I started learning how to trade, but I couldn't. I had to sling the big boy contracts with the big dogs, and one contract, and I was blowing up accounts, two, three, $4,000 accounts, and then I finally learned how to trade the stinking market. It's just tuition. You gotta pay your tuition. Mine was a little expensive, but I had a career that backed it up, so it didn't matter. I blow up an account. I wait a few months, and then go sling another $3,000 into another account. Um, this is just as big as micros when micros came out. I remember when micros came out, I was like, man, that's going to be awesome for future traders. Single stock futures coming this summer. This is fantastic. If you click on find out more, this is fantastic, people. I am so excited about this. I am real excited, but I got some concerns, and I'll go over the concerns I have. I'm going to do a video about this. I'm going to get my thoughts together, and I'm going to do a video about this. Stocks and futures better together. You're daggone right it is. Ready for a game changer in equities trading starting this summer. Trade 50 plus of the top U.S. companies from the S&P 500, the NASDAQ 100, and Russell 1000 with the flexibility and efficiency of financial settled futures. This is fantastic, and I love it. And you're going to be able to be trading like NVIDIA, Apple, Google, all them big boys. You ain't got a $100,000 stock account. Let's go sling some futures on them. I am all for this. I am all for this with the CME group. There's only one concern that I have with this, and hopefully they won't do this. Okay, let's think about this. The big boy contracts for the ES. Okay, one tick is $12.50. Okay, that's fine. One tick on the NQ is $5. Okay, that's fine. But the NQ trades like a squirrel hyped up on Red Bull. So you can lose $200-300 in a matter of seconds, okay? I am a little concerned with this because this is good for hedge funds, for Citadel, BlackRock, Goldman, all the big boys that are slinging around futures, okay? It's great for them, okay? They can diversify their portfolios, they can hedge stuff, they can do this and that. But what I'm concerned about is how much are these ticks for these stock futures that are coming out with the CME group? Is each tick going to be like $10, $20, 15? Who knows? What is it going to be like? And if you are going to have the futures for the big boys to be slinging around, because that's all they care about, okay, because retail traders were only 5% of liquidity in the futures market. Are they going to have micros? Are they going to have micros for the stocks? Are they going to have the big boy contracts for the institutions and hedge funds to sling around? Are they going to have that? Are they going to have micros for the stock futures for us, the little small dogs? You know, we're just little pups in the market. Are they going to have micros for us to sling around? You know, I don't know. But that's one of my concerns of it's only going to be out for like the big institutions to be slinging around. So that's just a little concern. Are they going to have micros? Yeah. Now, see, if they don't have micros, and I hate to burst your bubble if you're all happy about this like I am, if they don't have micros for this, for one, they're going to be slinging around the contracts for the big dogs. That's just the way the market is. They don't care a flying crap about us. They don't care about the big boys. Okay? So this is awesome. This is fantastic. I'm glad that that CME group is doing this. It's coming this summer. I'm extremely excited about this, but I do have a little concerns about it. I'm a little concerned about it because they're only going to be looking at the big dog institutions and the hedge funds, okay? So, and also, are these prop firms, are these fake prop firms going to be doing this as well? Okay. And what kind of stupid rules are they going to have on that? Who knows? That's why I say make your money on these fake prop firms. Take that profits that you get, that you make, get your payouts, and go push that money over to a private account. Learn how to trade on these fake prop firms. Take your money and then move it over to your private account like I do, and go trade. Your money, your rules. Single stock futures is coming this summer. I'm very happy about this, but I do have concerns. And that one major concern is, are they just going to be big boy contracts? You know, if they are going to be big boy contracts, then I probably won't be slinging or swing trading them in my personal account. I probably won't be doing that. Maybe if I do, it will be spread trading, like maybe you know, like Apple and Google. Maybe if Apple ran up like 2-3% higher than Google, I might short Apple and long Google and just kind of, you know, if they trade in correlation together, you know, I could be doing that. But are the fake prop firms going to be pushing the stocks in the futures too? More than likely, because you know, it'll just bring in more people for them to screw over. Uh, all right, I'm going to this is a valid trade right here. Okay, so um, this was a valid trade. If you got a pop and you got yourself about 10-15 points, you need to move to a break even and try pay yourself a little bit, get a runner. Okay, you got stopped out or you took a small loss. Big deal. Start trading down. This one right here, we crossed over on the Heikin-Ashi smooth lines. Do not buy. Do not sell across. Okay, I've ran the numbers. In the long term, I did a thousand historical trades. Do not be selling these crossovers and buying the crossovers. Okay, this is not a crossover signal for the Heikin-Ashi smooth lines on the site. Do not be buying that. In the long run, you're going to lose money. Trust me, because I've already done 1,000 trades historically, and the numbers don't add up. Okay. Um, but what you can do is right here, you have a sell and balance area right there. You have a sell and balance area right there. And then that line you close below the smooth Heikin-Ashi lines, they're sloping down. You can go ahead and go short here and probably cover right up in here and get yourself about 20 points, about a $400 trade. Then we kind of moved up. We had a buy and balance. Okay. We had 4 times more buyers than sellers trying to push it up. I would not take that trade, okay? This buy and bounce you do not take because for one, you don't have any support like you did up here on the 120 contract. That's one execution of 120 contracts. Okay. You have multiple buy and bounce areas for support. That was good, but it didn't pan out. You made like 5, 10 points probably or break even. That didn't pan out. What you had here was absorption because we're spreading apart. We're sloping downwards, buy and bounce, but boom, we trade below it. They got absorbed. Okay. We have an inside bar right here. This is another trade that I used to do in my old book, in my old trading book. I don't do it as much anymore, but you can take this inside bar right here, and you can trade, and you can get in on the break of that inside bar. And where's your stop? Your stop is up there, or it can be up here. It depends on what your risk tolerance is. Okay, and then you can start trading it down. And when you break the high of a candle right here, let's say you get about 60 points. Okay, that's a valid trade because we had a sell off. So many people get FOMO and they start shorting here, and then it pops up, and then they cover, take a loss, and then the market reverses, and they just go right back down, and then they're ticked off. Okay, so you sell off, and if you keep selling off without you, who cares? Move on. We have a little bounce, you have an inside bar, and we have a nice sell off. You can actually do this. You can do a starter contract here. Okay, let's say you do two micros right here, and then we break this area, and then you do 3 micros, and let's say your cost average is right here, okay? And then we start taking out this 150 lot, that we start trading above it into this area, then you guys sell 50 points, okay? I say 50 points on 5 micros, $500 trade. Okay. So hopefully all this uh, is pretty decent. Uh, I'm going to put out a video for the order flow pulses. It's in beta. Um, it doesn't have a lot of bells and whistles. I'm not trying to compete with Bookmap. It doesn't have all the bells and whistles. Bookmap is huge. Okay, we have absorption here on this 150 lot. We have absorption right here, and the reason I can tell it's absorption is because we have a 150 lot with big volume, big negative delta. It came down here where the bids were sitting on the book right here. We couldn't break through and trade back down, and then we started trading back up. We start trading back up, but we're trading back up on some thinly volume, so they're getting absorbed a little bit. Okay, they're getting absorbed a little bit. If you want to try and trade the break of this, you really, if you try to trade the break of this, what you really need to see right now, you got more selling than buying because that red bar is wider than the green bars. What you really need to see is you need to see a wide green bar that's dark green that tells you high delta, and then you can try to get yourself a pop for about 10 points. Okay, because you had absorption down here, that 150 lot, 150 contracts, one execution, 150 contracts, because the market makers play off the market maker lets these institutions play off of each other. Okay, and then those filled orders and the back room gets filled, and then it has to be reported to the CME. So then the CME tells us, and then Resmic tells me that hey, 150 lot got kicked off. Uh, so they got absorbed because they couldn't break through this area right here, this bid. So then we just get a little pop. Okay, not a very good trade. You don't want to be slinging 10 micros or one mini right up in here. You might want to go 2 or 3 micros and then kind of try to get yourself a little pop there. Okay, but you're coming up in here into resistance. You got 49 just kicked off right there, 49 volume right there. Nice, and we got some pretty good positive delta. You want to see that hold. You want to see that hold right here at 977. You want to see that hold. So if you got in here at 61 and you're at 71, you got 10 points. You see that pop, you want to pace yourself a little bit, move to a break even. Well, that's all I got. I'll see you tomorrow morning, 9:15. We'll go over the market. I'll try not to be eating a Belgian waffle the wife makes. So, hey, talk to you tomorrow at 9:15. All right, well, I'll shut this thing off. Stop streaming.